Welcome to the European Market Open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua in London with Danny Berger. Now, here are your top stories. Not taking any chances. More countries actually restrict travel and impose tighter curbs as Omicron cases spring up around the world. Relative calm, oil rebounds, treasury yields rise, and European futures point to a stronger open after Friday's sell-off. And we'll have special coverage of the Omicron variant this hour, what we know and what it means for the markets. We'll be speaking to Linda Bold. She's a professor of public health at the University of Edinburgh and an advisor to the Scottish government. So first, let's take a look at the futures. And again, I keep on hearing that there's actually quite a lot of buying opportunity out there, Danny. A lot of the focus is not only on Omicron, but what it means for travel and leisure stocks. And we still don't have the right tools to try and understand exactly what we're seeing. So for the moment, we're seeing a little bit of a lift down some, or actually gaining some 1% after the huge sell-off we saw Friday. Danny, what's on your mind?
Well, Francine, you're totally right. We really got a deluge of analysts saying it's a buying opportunity on Friday. Perhaps that was the big Black Friday deal up for markets. And we are starting to see that as we get markets to open up. The first numbers we're getting from the FTSE 100 up just 0.7%. So considering that those markets had fallen more than 3%, now we're up by 1%. That's not totally undoing what we've seen. But we're also seeing France open up. The CAC 40 up 1.4%. Recall this morning, just a few hours ago, France saying that they've detected a possible 8 new cases of the Omicron variant. Still, as a whole, the Europe Stock 600 fell the most since April of 2020, on Friday, rather. So even though, despite the fact we're getting Spain now as well, up 1.2%, as I was saying, it's going to take a lot to get us back on track of where we are before. So there's a sense of calm today, but perhaps not a lot of conviction, Francine. So let's take the view cross-market as well. When it comes to U.S. futures, we're also seeing a session that's starting to give back some of those losses, pairing them up nearly 1%. So similar story to what we're seeing in Europe. Same goes for the bond market as well. We're seeing 10-year yields up nearly 5.5%. Again, we saw a bid to the Treasury market, really to all havens on Friday, over those concerns of the variant. We're also seeing a euro starting to weaken versus the dollar, down by 0.5%. It was dollar weakness on Friday that's starting to shift. I was talking to one of Nomura's FX analysts this morning who said that because of the differentiation between European and U.S. central banks, that this is the move that he has the most conviction behind, a short euro. So we're seeing that play through. One of the biggest moving assets so far this morning, Francine, is NYMEX crude up 5% after that turmoil in the oil market on Friday.
Danny, there is quite a lot, of course, going on with oil. So we look at the groups that are moving the most in today's trading session, and of course, oil right up there. Now, when you look at some of the things that we should be watching out for, it's not only. It feels, Danny, that today is only about Omicron. Actually, when you talk about what the markets have been doing, you kind of think, well, I don't know why I got out of bed. That was Friday. Today, again, because we're seeing a little bit of buying of the dip, it gives us a good indication of where you see the gains or not. Remember, also, we have some other key events this week. The Fed Chair Jay Powell, John Williams talk. We have Governor Kuroda, China, PMIs, Eurozone CPI, and then we also have OPEC and its allies possibly reevaluating some of their plans. So this is what we're seeing overall for some of the groups moving the most. So market participants actually keeping a close eye on any potential fallout from the Omicron variant. Here's how some key players have been reacting on Bloomberg TV.
We're entering a bit of a risk-off day.
This unwelcome news.
It's a warning sign to all governments.
But I can quite understand why financial markets are worried.
Couldn't come at a worse time.
A very illiquid market at the moment on the back of the Thanksgiving.
It makes sense for some of those investors to just take some risk off the table.
It could take us a while just to recover from this.
The time it takes to analyze the virus.
Leaders of every major nation stop dealing with this as though it's an issue just for their nation. It's not. It's a world issue.
A delay rather than a fundamental derailment.
We still see there's some underlying strength.
This is not the first COVID, this new strain wave that we are seeing.
We absolutely should not imagine that all is lost. It's not.
Let's get more now from Bloomberg's MLive, Eddie van der Veld. Eddie, it does seem, first of all, good morning. It does seem like the markets are recalibrating Omicron and trying to figure out exactly the impact on the economy. Are there cooler heads today because we don't know what we're dealing with? Or is there a belief in the markets that actually we can look through this because, infections could be pretty mild?
Francine, absolutely. I think Friday is starting to feel a little bit like a panic or a bad dream caused by too much turkey and thin liquidity. And I think we just things are shaking into place now. I think traders are looking at this saying, look, we've had variance before. Yes, this one is different. Maybe the appropriate reaction lies somewhere in between what we saw on Friday and today's overall calm. I think there's obviously a lot that traders don't know and that they would like to know about this. But I think, some of the more extreme moves that we saw on Friday, I think that was mostly due to thin liquidity, yes.
All right, all that tryptophan from the turkey getting to everyone's head. I know you're also writing on the MLive blog this morning about oil as well, and perhaps oil doesn't necessarily get the same status of stocks, treasuries, everything going back to normal. Just how vulnerable is that market?
You know what, I think for me, oil is going to be the real marker here for how serious the market is taking this, because I think if we see oil continuing to sell off, and obviously today it's up something like 5% last time I checked, and I think, but if we're talking about lockdowns, we're talking about the policy response to this, then I think oil is really important. But oil is also important because it feeds into the inflation debate, which then feeds back into the central bank action. So I think oil is really the key for me in all of this.
Mm-hmm. And what I was surprised about the market reaction function on Friday was that if we're seeing more lockdowns because of Omicron, wouldn't that be supportive for a lot of fixed income, because it actually means that central banks delay some of the moves?
Francine, I think you absolutely nailed it. And I think that for me is the one that said to me that markets were just looking for a bit of a reason here to reprice. And I think some of those bond moves that we've seen, I think they are going to be a little bit more sticky than the stock moves, because, I think there was a lot of optimism about tapering in the market and about tighter policy in Europe and in other places, which even central bankers were saying were just not substantiated, right? And I think for those reasons, I think the bond moves are going to probably stay with us for a little bit longer, and the stocks moves probably erase a little bit quicker, if I had to guess.
Is it surprising, though, at all that we did see this extent of volatility in the bond market, considering this is a market where you still have the Fed putting its thumb on the scales?
Oh, absolutely. I think so. But I think, I think the question at the moment is how heavy are they willing to put their thumb on that scale, right? And I think for now, I think particularly over the weekend, we heard from a lot of central bankers saying, listen, we're gonna have to wait and see, and this doesn't change the equation just yet. But I think, for the market perhaps overreacted, perhaps coming back a little bit, somewhere in the middle.
Eddie, what does it all mean for dollar?
The dollar is a wild card here. I wonder if the dollar didn't act like a safe haven on Friday, which is a difficult one, because if the dollar acts like a safe haven, we know how other markets are going to react. We know gold prices are going to go down if the dollar rises. But we saw this strong euro reaction on this the unwinding potentially of a carry trade between Europe and the US. Now, I don't know that is going to be the long-term outcome. I think if we do see a real panic on the back of a variant that spreads quickly and is very deadly, and therefore needs a robust policy response, then I think the dollar is a haven. On the contrary, if we see a fairly mild virus breakout, which spreads very quickly, then I think the dollar perhaps will give back some of its gains.
All right, Eddie, thank you so much for joining us and giving us that very thorough view, as always, on all of the markets. That's Eddie Vanderwalt from our Bloomberg M Live team. Now, Francine, I want to get to some of the movers today as well. And we're seeing, again, some of these really macro concerns, or really the reversal of those on Friday dominating. We're seeing Ryanair up 3%. Travel and leisure, I should say, as a whole is up 3%. That was the worst performing sector on Friday. It had fallen some 8.8%. Also reversing some of Friday's moves is HelloFresh. It really was that classic pandemic playbook at hand on Friday, because we saw these sort of stay-at-home type stocks really outperform. HelloFresh was up 5% on Friday, so giving back some of that, but significantly not all of that. And finally, BT Group, finally, one that isn't moving on the bigger macro picture. This is after Economic Times, an Indian newspaper, reporting that Reliance Industries might be interested in a takeover of BT. BT not responding to that specific report, saying it doesn't respond to speculation, but even so, that speculation off of that report saying the share is higher by some 7.6%, Francine.
Danny, we'll have plenty more, of course, on that. We'll also talk inflation and its outlook from JP Morgan Asset Management. Of course, Miles Bradshaw, that's coming up shortly. We'll talk inflation, we'll talk Omicron. We have a good conversation on the markets. Plus, a little bit later today, we'll also speak to the Pfizer chief executive, Albert Bourla. Don't miss that interview. It's an interview, of course, about Omicron and further vaccines. That's at 5:30 p.m. UK time, and this is Bloomberg.
Will we get to herd immunity? Or let me ask it a different way. Have we given up on herd immunity as a practical matter?
You will know when you get to that point. When the cases are so low, they're barely detectable. That's what herd immunity means. We don't know what that percentage is, David.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I look at the opportunity we provide, and providing access to information and knowledge, I think we'll end up being on the right side of history as well.
Welcome back to the Open. We're about 12 minutes into your European cash equity trading session. We're looking at a day of rebound, perhaps not a lot of conviction, but we are coming back to more than 4% declines in the Euro Stoxx 600 on Friday, which was its worst day since June 2020. So the broader index up nearly 1%. Some of the outperformers, France, up nearly 1% as well. Not as big of an outperformance for the DAX and the FTSE 100 as well, but still, it is a much more positive day than we saw on Friday. And of course, that Friday action driven by the emergence of the Omicron variant that kept asset managers on their toes. It's added yet another risk factor to an already murky outlook. Threats of inflation and uncertainty over central bank monetary policy still have yet to go away. Well, let's dig into this. Joining Francine and I is Miles Bradshaw, head of global aggregate fixed income strategies at JP Morgan Asset Management. Miles, first off, thanks so much for joining us this morning. So part of the action we saw on Friday was this repricing in terms of Fed rates, especially at the front end of the curve, seeing some of those rates pushed back in terms of when they happen or whether they happen at all. Do those moves make sense to you?
I think so. Trying to think about it, and there's lots of information. There's lots more information that we don't understand. Firstly, it's a public health issue. And to me, I'm relatively optimistic. The worst case scenario is kind of a repeat of last winter, where we have lockdowns and we came out of those lockdowns. We know a clear policy response for that, which is fiscal support coupled with monetary accommodation. And the economy has adjusted to these lockdowns, so we'd expect the economic shock to be less severe. So I think it's right that the market responds to this by saying if there is going to be a repeat of the winter lockdowns or lack of mobility, then it would be a surprise if central banks continued on course. Instead, more likely they will delay the pace or the start of their tightening process. So I think that makes sense.
Miles, given where we are now, and we actually don't know that much about Omicron, whether it's more deadly, whether it's more spreadable, it seems that infections are very mild. But again, some of the data points are so small. Do markets readjust to what central banks do, or will they wait a little bit? Like, what's your take on it?
Well, I think for risk assets, it's slightly more straightforward because more accommodation from central banks, or let's say the lack of tightening, because we're not talking about easing here, we're just talking about the lack of tightening, is supportive. It suggests the economy can run hotter for longer. I think for fixed income, it's more complicated because the second question is, assuming there is no policy mistake and assuming policymakers are accommodative, the question is another COVID wave deflationary or inflationary? And I think in the near term, as we saw with Delta in the US, the near term is that in the next quarter or so, GDP growth is perhaps slightly softer than it would otherwise be. But I think also the evidence is that if we look further ahead to 3 quarters or so, then it's more likely that with that policy support, you have additional inflationary pressure. So I think for the fixed income market, it's about the timing of those hikes and the timing of that tightening. And my conclusion is that for now, here and now, you would expect central banks to remain accommodative, to taper less or to tighten less, whether you're talking about the ECB or the Fed or the Bank of England. But once the economy gets over this wave, and once we're clear about the health implications, and once we get out of winter, importantly, then probably the pace of tightening is going to be more rapid because the economy will have been running hotter for longer.
Well, to your point about inflation and the impact from here on out, we've seen, again, as we've seen this playbook happen before, that often what happens is consumers want durable goods instead of traveling, things like that, and that's part of what's contributed to inflation. Does that mean if we get a repeat of that, then we see even more aggressive inflationary pressures coming into the fore because of this variant?
There could be that, but I think that demand shock has largely taken place. I think the bigger issue is supply chains. Is once again you have lack of mobility, whether it is shipping things by trucks or what have you, and that reduces the effectiveness of the supply chain. So it becomes a supply chain shock rather than the demand side shock, which we saw last year, where there was a switch from services to goods. I think that demand shock has still on board. I mean, when I walk around central London these days, there's a lot more closed shops than there was back in June of 2020 because the economy is adjusting to that switch.
But Miles, I guess 2 questions is first, when monetary policy, action actually normalizes, how many zombie companies will we be left with? And have the supply chains moved enough, also because of the Trump administration, or can they move further now? So will some of these supply chain pressures ease over the next 2 to 3 years?
Yeah, I think the zombie companies, I'm quite optimistic there. I think when we look at the fundamentals of the sector as a whole, whether you look at the banking sector, the non-financial sector, the consumer sector, balance sheets are actually very strong. So I think the zombie companies is more about the small businesses, the people that run shops in locations that are no longer visited as much by consumers, rather than it being the listed or the public markets that we invest in. When we look at those fundamentals in terms of debt dynamics, they're very good, and the consumer sector is very strong. So I'm less worried about the zombie companies aspect. Excuse me, your second question I've forgotten now, but what was your second point, Francine?
The second question, Miles, was about supply chains, whether actually they can move further from what we have now, given the readjustment we had under the Trump administration.
Yeah, I think there is going to be an adjustment, but right now we don't have enough inventory, and so the process is still people trying to rebuild inventory, and that keeps pressure on supply chains. So it will take, I think, a longer time for supply chains to adjust. And so in the near term, what we're left with is continued pressure on supply chain management, and therefore continued strong pricing power for distributors, manufacturers of consumer goods. So I think that means that this transitory inflation that we're talking about is more persistent. Central banks have been quite clear that they're comfortable with that. The bigger issue is the underlying inflation from rents, from wages, and again, in the quarters data, I don't think that's going to be pushing that up, but I think in 3 quarters, 2 quarters time, lack of mobility means it's harder to source workers to meet the demand that inevitably is going to be stronger if the policy response in the midterm is correct.
Right, and El Arian over the weekend also saying that central banks need to wake up to the fact inflation is not transitory. Miles, so wonderful to get your thoughts this morning. That's Miles Bradshaw, head of global aggregate fixed income strategies at JP Morgan Asset Management. Now let's get over to the Bloomberg Business Flash, and Gazprom's third quarter net income has surged to an all-time high. We had gas prices reaching fresh records amid Europe's deepening energy crisis. Net income at the world's largest gas producer rose $7.8 billion compared with a net loss a year ago. The company says it will pay 50% of adjusted net income in dividends. Chinese food delivery giant Meituan fell in Hong Kong after a bruising antitrust probe and mounting competition from Alibaba saw a wider loss. Net losses swelled to almost $1.6 billion for the latest quarter. The company is overhauling its business with investment in autonomous vehicles and drone delivery. Blackstone, the world's '1 private equity firm, is among the key holdouts yet to sign a COP26 pledge to eliminate CO2 emissions and help limit planetary overheating. 450 of the biggest names in global finance agreed the declaration at Glasgow earlier this month. Fellow buyout giants Apollo Global Management and KKR have also not signed. And that's your Bloomberg Business Flash, Francine.
Danny, coming up, oil rallies after a brutal sell-off on Friday, so we'll have more on that. We'll have, of course, a read across towards inflation. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to the Open, everyone. 22 minutes into European trading day, and of course, it seems like things are looking upwards, certainly to, compared to the sell-off we saw on Friday. It was pretty brutal. Now economists and, of course, market participants trying to figure out what Omicron is and the impact it would have on the economy. If we see lockdowns, it would also mean central banks are more supportive, so we're seeing a nice little lift to most of these markets. Now, oil rebounding from Friday's rout today as traders assess the risks to global demand from the new virus variant, while speculation is also mounting that OPEC Plus may actually decide to pause output increases when they meet this week. Well, joining us to discuss all of this is Bloomberg's Helen Robertson. So, Helen, good morning. We've got a new variant. There's an OPEC meeting. So talk us through what you're expecting this week.
Good morning. Yes, I mean, this OPEC meeting is going to be probably the most interesting one that we've had in the past couple of months. And that's due to a combination of obviously the fact that there's this new variant, as we know, that's been identified. And then also there's been the sort of geopolitical wrestling, shall I say, that's been going on alongside this. So with the US coordinating a strategic release of crude stockpiles, essentially what's been happening is that obviously President Joe Biden has been attempting to sort of pressure OPEC to open the taps at a faster pace than the group had already provisionally agreed. Now, as we know, they had a sort of provisional agreement in place to increase output by about 400,000 barrels a day for January, but then obviously that was to be confirmed at this week's meeting. Whether they will do that now, obviously we don't know. What they did at the end of last week, we heard, was that the group delayed some technical meetings, which are precursors usually to the main OPEC Plus meetings. So that is now happening on Thursday. And then the technical meetings have been pushed back to in the days before. And the reason that that's happened is because the group wanted more time to assess the state of the market. I mean, you mentioned what happened on Friday with the rout. Crude tumbled by the most in over a year. It is up again a bit this morning. So obviously Brent is currently up about 4.5%. WTI is up about 5%. So, yeah, I mean, it'll be really interesting, obviously, to just see what happens over the coming days.
All right, Helen, thank you so much for keeping us up to date. That's Bloomberg's Helen Robertson. Thanks so much for joining us. And as Helen was just mentioning, we are seeing oil up some 5% when it comes to both WTI and Brent. So that's rebounding again after the biggest sell-off for oil in quite some, since 2020, Francine. And that really is reflected what we're seeing across all markets, just this change, this rebound from much of the action on Friday, Fran.
Yeah, and if you look at, the strategic petroleum reserves that were actually released last week, you wonder with hindsight if Omicron's going to take hold, whether that actually made sense. Coming up, we'll get more on our top stories, the Omicron variant that's spreading across the globe, the impact it has not only on oil, but also on treasuries going forward. This is Bloomberg.
remaining. 101 years ago, Ewan Dixon was the first guy to do it. It's taken a century for us to change our propulsion system away from liquid fuels.
There are dozens of international companies in that airframe size who have realised the opportunity, are in a race to get those commercial aircraft out there at that scale. It's an area that can be served by hydrogen, which we're well placed with, through fuel cells.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome to our special coverage of COVID and the Omicron variant. I'm Danny Berger with Francine Lacqua in London. We're 30 minutes into your cash equity trading day in Europe. Here are your top stories. Not taking any chances. More countries restrict travel and impose tighter curbs as Omicron cases spring up around the world. Relative calm, oil rebounds, treasury yields rise, and European stocks open higher after Friday's sell-off. Well, welcome to our special coverage of the Omicron variant and what we know and what it means for markets. We're going to be speaking shortly to Linda Bold. She's a professor of public health at the University of Edinburgh and an advisor to the Scottish government. But Francine, in the meantime, there is this sense that perhaps some of Friday's reaction to the variant was overdone.
Yeah, there's a feeling that actually, if you look at what the new variant could mean for lockdowns, then it also pushes back some of the policy normalization that we've talked about in central banks. So it's very clear that there's a bit buying the dip is also something that comes up in notes quite a lot. Again, when you look at Omicron, we actually have very little data on what it works, on whether it's more lethal and whether it's more spreadable. But for the moment, it seems that there are quite some mild infections in South Africa. Again, the data points are very low, so I wouldn't read too much into it, but we're seeing a nice little lift and a bit of support on, for example, these European stocks, with the stocks Europe 600 gaining some 1%, similar gains for the FTSE 0.8% higher, and the CAC 40 0.7%, Danny.
Certainly. I mean, again, it is significant to see that we are rebounding. We had heard over and over again on Friday that perhaps that this is a buying opportunity. This is the Black Friday deal that you should be looking at, considering that we might get that Santa Claus rally heading into the end of the year. But Francine, we're still just 2.2% from the all-time highs, at least in U.S. stocks. So I guess there is a sense of, you know, how good of a buying opportunity could this be when sectors and indexes are already priced pretty richly.
Yeah, and I have to say, Friday was an absolute bloodbath. You kind of wondered why people got up after Thanksgiving, a celebration, just because it was down some 4% in certain cases. And today we're seeing a lot more stability. So if you go and look at the sectors that are moving the most, you can see that some of the sell-off that we saw on Friday now recouping some of the gains. I know there's airlines that we're looking at, and overall there's just a lot of green out there. Travel and leisure leading the gains after the massive sell-off we saw on Friday. Autos, the only sector in the red. Now let's also turn to the Omicron variant that is spreading across the world to try and really better understand what we're looking at, the data points. The World Health Organization urging caution after experts from South Africa say symptoms linked to the new variant have been mild so far. Now, meanwhile, some countries have enacted travel restrictions on South Africa. Here's what world leaders are saying.
I've decided that we're going to be cautious, make sure there's no travel to and from South Africa and 6 other countries in that region.
There is no scientific justification whatsoever for keeping these restrictions in place.
I'm aware that the restrictions are stricter compared to other countries, but we must be as cautious as possible about an unknown risk.
It does appear that Omicron spreads very rapidly and can be spread between people who are double vaccinated. There is also a very extensive mutation.
The new variant is concerned. It moved from being a variant of investigation to a variant of concern within the space of 24 hours.
We are in a strong position, but the objective of what we're doing tonight is to keep that position strong.
We call upon these countries that have imposed travel bans on our country and our other Southern African sister countries to immediately and urgently reverse their decisions.
Well, joining us now is Linda Bold, Professor of Public Health at the University of Edinburgh, along with Bloomberg Intelligence's Sam Fazeli. So, Sam, thank you so much for joining us, Professor Bold. Let me start off with you. When you look at Omicron, what do we not know that you really want to find out? Do we need to know whether it's more transmissible, or is actually the most important thing whether it's more deadly?
So variants are classified as a VOC for three reasons: potentially more transmissible, secondly, they may cause more severe disease, and thirdly, there may be immune escape, so the vaccines may be challenged. At the moment, we actually don't know definitively any answers to those three issues. We have epidemiological evidence from South Africa, Pretoria and Johannesburg showing big rises in cases, including in wastewater, which is an early warning system. That may well suggest more transmissibility, but it's actually far too early to claim that this causes milder disease. You have to remember, if these are new cases, it will take a couple of weeks until we actually know whether larger numbers are going into hospital. And on immune escape, we may know that a little bit earlier because those are studies in the lab with blood, for example, from people who've had a vaccine. But still, big questions. I don't think people should panic, but we need time for science to do its work.
Linda, so great to have you on this morning. And Sam, I want to bring you into the conversation as well. Linda there describing a lot of what we don't know in terms of this variant. But what do we know so far, Sam, on how widespread the variant is?
Yes, good morning. So obviously you see the list of countries growing in terms of finding cases of this infection, of this variant. Scotland has just announced some more. And I'm afraid I think that's going to be the case. When you look at some of the information that's coming out of South Africa, it's possible that the infection had actually been relatively widespread during this time. So that's what I expect to see, the continued spread.
Professor Bold, does closing the airways actually work? Is it just to buy time for virologists to understand what we're dealing with?
Yes, so it's interesting, as you've just heard, we've just announced 6 cases in Scotland in the central belt of the country, and more information will be coming out in the coming hours on those cases. Clearly, we're very concerned. I think what you're going to see internationally is it's entirely proportionate to apply travel restrictions when you think that there's community spread in one area but not another. But what I would say is if you then observe community spread in a number of different countries, those travel restrictions are far less well justified. At the moment, countries are doing exactly what you described to allow the science to be conducted and for us to find more definitive answers. The final point I'd make on that is, of course, earlier in the pandemic, many countries were quite slow to protect their borders and spread. So you're seeing governments around the world now being much more cautious and quicker than they have been earlier.
Professor, does it also make sense then to be more cautious in terms of not just external restrictions, but internal as well, things like gathering as we head into the holiday season?
Yes, that's correct. Now, in many countries, we're still burning really quite hot at the moment in terms of cases. For example, in the UK, in recent days, over 50,000 cases a day. So even without this variant, we should be advising people face coverings, distancing, ventilation, do regular asymptomatic testing. In many countries, including the UK, you can get access to that. And of course, vaccines, including boosters. But I think this recent news really gives, I suppose, to be positive, one small positive thing, an opportunity for public health professionals like myself and agencies and governments to communicate that now is the time to be extra cautious, not just because of the winter in some countries, but also because of what we don't know about this new variant.
Sam, what's the incentive for developing nations to actually sequence and find new variants that could help the world if they get pillared like South Africa and neighboring countries have?
Francine, that's a really good question. But I think scientific integrity and humanity will hopefully override that as the situations arise. The same thing happened with the beta variant, and yet the South African scientists were even more exemplary this time with the Omicron outbreak and variant than they were with the beta variant. So the problem, of course, is that the sequencing in South Africa is at high levels and exemplary. What happens in the countries around is a different story, and we still don't really know where the source of this particular variant was.
And Professor Bald, if I can come back to you as well, you mentioned that cases were already high even without this variant being a concern. Does all of this come together and mean that we should look potentially at another holiday season that gets disrupted akin to that of 2020?
I really hope that's not going to be the case. I mean, we've built up so much knowledge. We have highly effective vaccines. Even if this variant is implicated in some immune escape, it's unlikely that the vaccines will not continue to protect us against severe disease and death, mortality. That's a really important public health message to convey. We haven't had a variant to date that has done that. So I think what governments around the world are trying to do is be proportionate and emphasize the public health messaging, try and do what we can. But I think it's only when countries' health systems are overwhelmed that governments are forced to really, pursue the route of another lockdown or severe restrictions, as we're seeing in Austria and the Netherlands. My hope for the UK and many other countries is that will not be needed, that Christmas will be fundamentally different to what we faced in 2020 and into the new year of 2021.
All right, that's certainly the hope from many people around the world. Linda, thank you so much. Linda Bald, there, Professor of Public Health at Edinburgh University, and Sam Fazeli from Bloomberg Intelligence. Now, coming up, France becomes the latest European country to detect possible cases of the Omicron variant, sparking concern that the new mutation has already gained a foothold on the continent. We'll focus back on that story next. This is Bloomberg.
An extra $1 trillion in spending not increase inflation?
By increasing the productive capacity of this country. And that's a very important thing that we, frankly, have not successfully done across most of my lifetime. I've been waiting for this legislation for months since I became Transportation Secretary, but various presidents have been hoping to reach this day for decades, and it hasn't happened for all kinds of reasons. The American public has been rightly impatient. Now we're getting it done, both making up for lost time and laying a better foundation for the future. Let me also point out to the fact that Part 2 of the President's agenda, what I like to call the big deal, but Part 2 of that, the Build Back Better Act, has even more that will help beat back inflation by lowering some of the costs that Americans feel most acutely, the cost of childcare, the cost of healthcare, the cost of housing, the cost of prescription drugs, bringing those down while also making sure that we ease some of those labor market issues we have by making it easier for working parents to afford to go back to work.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Welcome back to our special coverage of the Omicron variant, what we know and what it means for markets. I'm Danny Berger alongside Francine Lacqua in London. Well, let's dig further into this story in the Omicron, which is the new variant that's spread across the globe. France is one of the latest countries to report new cases, 8 possible ones, it said, within the strain, within its borders of the new strain. Now, meanwhile, some countries have banned travel from South Africa, where the Omicron variant was first detected. In a moment, we're going to be hearing from Bloomberg's Ed Ludlow on the impact on global travel stocks. But first, let's check in with our Europe correspondent, Maria Tadeo, who is in Brussels. Maria, how is Europe reacting to this new mutation so far?
Well, you know, Danny, when you look at the cases that we have already, there have been multiple cases now identified, suspected: Germany, France, Italy, also Belgium, and in particular the Netherlands, where 13 cases were identified yesterday. Of course, all of this was people on a flight back from South Africa into the Netherlands. Now, the message from European governments over the weekend, it's the same we've heard for weeks, days now. You have to get the vaccine. This is really the only thing that will prevent an escalation with this new variant. We know it's already here in Europe. The point now is that you have to prevent it from spreading, and that's been the message. Get the vaccine, whether this is your first dose or the booster shot. You have to get it before the winter. The other thing, Danny, that I would highlight, and this is becoming a growing debate, is what to do with the IP of some of these vaccines. For years or weeks, months, we've heard that a lot of this has to do with everyone receiving a shot. No one is safe until everyone is safe. But in reality, we're seeing huge disparities between the richer countries and the poorer countries, which of course make this a much more fertile ground for new mutations to come into place. So this will have to get done through the WTO. The bad news, of course, is that the meeting that was supposed to happen this week has been canceled because of flight restrictions from the Swiss government. So if you were expecting a breakthrough on the IP, it's definitely not going to happen this year.
Yes, so what's the latest exactly on the IP, Maria? The new variant reigniting this debate on patents and whether the IP should be removed. Europe has rejected this in the past. Will it now have to change its tune?
Well, you know, what the Europeans have said for a very long time is that this was not about the IP. And when you look at a company like BioNTech, which of course has very close tight links to Germany, they've said that that type of breakthrough technology has to be protected, has to be respected. But also the company, which of course they have a vested interest, they say that removing the IP could lead to chaos in production. The focus for Europe has been to improve and increase the industrial capacity. We are seeing that to some extent. Europe is the biggest exporter now of vaccines. But when you compare the number of vaccines that were promised through COVAX, and this is also the UK, the United States, and so on, versus delivery, there is a big shortage, and that's where part of the problem is coming from.
All right, well, from the IP debate to the travel debate, let's go ahead and take a look at Omicron's impact on global travel stocks. Bloomberg's Ed Ludlow joins us here. So, Ed, what is the latest we've seen so far with European travel stocks?
Yeah, we're about 45 minutes into the European session. You can see some airlines actually rebounding. IAG, the parent company of British Airways, up 2.6%, although Deutsche Lufthansa softer by 0.4%, although it had seen bigger declines at the open. And broadly, you can see that we're in the green. But here's the thing, a rebound in name only, right? Given the declines we saw on Friday, if you look over a 2-session basis at the Stock 600 Travel and Leisure Index, we're still in high single digits of decline. There's a note out from Citigroup analysts that point out, if you look at the UK's measures, which is that arrivals to the UK have to quarantine, self-isolate until they return a negative test. Well, they see that both as a headwind to air travel in Europe this holiday season, but also a precursor of things to come in continental Europe. They say, you know, EasyJet's really exposed in that travel between UK and Europe in terms of key routes, and they do expect European nations to follow suit with that kind of restriction. Morgan Stanley also out with a note saying that volatility in airline stocks in Europe will continue. Why? Because we don't know anything really about this variant. We're going to take time and news flow to hear more. This is a chart of global airline indexes, right? We know that Asian airlines continue to sell off Monday, which is interesting given the rebound that we saw here in Europe. But you can see it's a pretty profound move lower, right? This was supposed to be a part of the recovery trade, and it hasn't quite panned out that way, specifically with the outperformance you see in Asian airlines, the yellow line here. So we're kind of in wait-and-see mode, but reading across the markets and the commentary this morning, the feeling is that this is kind of pretty much ground to a halt, a recovery in airline travel.
Yeah. So, Ed, we also saw a return to the stay-at-home trade.
Yeah, the other concern with this variant, right, is that we see lockdowns. You know, the prospect of lockdowns in mainland Europe was already there before the variant was discovered. You see that reflected in Friday's session in the US. Peloton Interactive was up by the most in 3 weeks. Zoom up by the most since August. But if we look to, US equity futures, we're kind of pointing higher as we head towards the US session. You might expect some of that stay-at-home trade to unravel a little bit, back to reopening trade based on what we saw in that rebound in airline stocks in Europe.
Yeah, perhaps a very short-lived reprieve for Peloton shares there. Thanks to you both. That's, of course, Bloomberg's Ed Ludlow here in London and Maria Tadeo reporting from Brussels. Coming up later today, we're going to carry on the Omicron conversation. We have Pfizer CEO Albert Bourla. That conversation with David Weston at 5:30 London time. This is Bloomberg.
Esta operación definitiva para dar con la captura de este bandido la planeamos el 15 de octubre del año en curso. A las 8 de la noche en una guarnición de Bogotá nos reunimos con los oficiales de inteligencia de la policía, nos reunimos con los oficiales de planeamiento de operaciones especiales de las fuerzas militares y de la Policía Nacional, y es cuando se decide cambiar y darle otro salto a esta estrategia.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to our special coverage of the Omicron variant. Now, what we know and what it means for the markets. I'm Francine Lacqua here in London with Danny Berger. Danny, let's go straight to the markets. And it does seem that actually we have a few market drivers. First, when you look at the market, it's a very different story to what we saw on Friday, where we saw this massive sell-off. However, if you see the gains today, overall, the European stock 600 gaining some 0.6%, actually a little bit slower in terms of gains that we saw minutes ago. Now, joining us to talk about the markets is Eddie van der Walt from our Markets Live team. Eddie, is this buying the dip because we wait for news of Omicron, or is there already, factored in that this is probably not as ugly that we thought on Friday?
I think the noises that we heard over the weekend have been a lot more positive, right? There's talk about the virus being highly contagious, but perhaps not as deadly. We will wait and see until we get more data. But I think the market is taking this to say, listen, there's no real need to panic just yet. At the same time, the central bankers that we have heard from haven't changed their tune very much. So it seems like policy stays on course, and therefore I don't see why markets should reprice significantly. Now, today, as you say, we haven't wiped out any of the losses that we saw. Even in oil is up 5%, but it's still significantly down from Friday. But we are seeing a calmer day, and I think that is what markets are looking out for.
What do we make of Bitcoin and really the entirety of the crypto space falling so hard on Friday, 8% when it comes to Bitcoin, when, you know, perhaps this is an asset that has nothing to do with new variants?
Yeah, I mean, you know, there's all this talk about Bitcoin being a risk-off asset and a haven and so on. And really, it's just proven over and over again that it is very, very correlated with tech stocks at the moment. But that said, you know, Bitcoin did really sharply sell off. And I think a lot of the assets that we saw that was repricing it was more a case of assets that had gotten a little bit removed from their fundamentals, like Bitcoin, like crude, and like some of the bond markets. And I think those assets aren't going to come back as quickly as some of the others, like equities maybe.
So, Eddie, is there anything right now, I know we'll talk a little bit about oil just because we have OPEC+, but is there anything right now that really catches your attention, which maybe we should spend a little bit more time on? I don't know whether it's currencies or another commodity.
Well, I don't know how much you've talked about it this morning, but I think the one thing that I want to talk about a little bit more is natural gas prices, because it is cold in Europe. It is unsurprisingly cold for the time of year. And we're already low on natural gas storage in a lot of places, right? We knew this coming in. We knew we needed a mild winter in order to get us through. And at this point in time, it looks like we're not going to get one. I tell you what, at the Van der Waals household, we had the fires burning the whole weekend trying to keep the house warm. And I think this is the case in a lot of the UK. Now, I think this could be a game changer, because I think if we draw down on those stockpiles really quickly, then that could be a bid on oil prices as well.
Yeah, my heat was cranked to the max over the weekend. Same. I wonder to what point this brings back into the question of what policymakers do, because there's some relief perhaps if oil sells off. They don't have to worry about people paying higher prices, but again, it's going to be cold. So how do you evaluate that mix between the push and the pull of these two factors?
Yeah, I think, you know, so the policymakers from the central banks, it's out of their hands, right? I mean, they can do what they want, but they're not going to be able to control inflation if it's cost push inflation and it's coming from things like natural gas. However, the wider community of policymakers, there's an easy fix to this. We need Nord Stream 2 approved, and we'll see natural gas flow in. And I think this is the game, perhaps, that's being played. I don't want to say that Russia is playing this game, but I think if we get Nord Stream approved, we'll see more gas flow in, and this will be very quickly solved.
All right, Eddie, thanks so much. Eddie van der Waals there from our Bloomberg Markets live team. Don't forget, of course, to check out their wonderful blog on TLIV Go. Now, that's it for the European Market Open. Surveillance Early Edition is up next. Of course, we'll have plenty more on the markets. Now, this is where we stand for European markets. The focus, as Eddie was saying, should also be on natural gas because of these cold prices. And then, Danny, a little bit later on, we'll also speak to the Pfizer Chief Executive, Albert Bourla. Don't miss that interview. That's at 5:30 UK time. Now, let's have a wonderful market check, because it's always a good idea, actually, to look at what's going on in the markets after the day that we had on Friday. So, first of all, U.S. and European equity futures climbing, crude oil up, Treasury yields also gaining. Investors tried to really recalibrate some of the economic risks from this new strain of the coronavirus, but we're seeing a lot of calm, certainly much more calm than we saw on Friday, and then the euro slipping and the dollar gauge ticking up. So we'll have more market moves shortly. This is Bloomberg.
Common ground on energy that you share now with the Prime Minister of the United Kingdom?
We are both very committed to the transition to a net zero future, and as part of that, to building up the renewable energy capacity for Scotland and the UK. Scotland has got massive potential in wind energy in particular, onshore and offshore, but also some real potential in new and emerging technologies, carbon capture and storage, for example. There's also, I think, an understanding, and perhaps the UK government and I don't entirely agree on the detail of this, but we must accelerate the move away from fossil fuels. We've got to do that carefully in a way that protects the people who are currently employed in that sector, in Scotland around 100,000 jobs, and do it in a way that doesn't see us importing more oil and gas, but instead moving to the alternatives.
Any young woman that's watching this wants to be the next Diane von Furstenberg, what would you recommend?
Be as true to yourself as you possibly can. The more you could be you, the happier you will be.
It does appear that Omicron spreads very rapidly and can be spread between people who are double vaccinated.
There is no scientific justification whatsoever for keeping these restrictions in place.
It will take a few weeks for us to understand what impact this variant has.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The WHO urges caution as more Omicron cases spring up around the world. Countries tighten travel restrictions. Investors recalibrate risks from the new strain, while oil stocks and yields climb, but the moves are modest compared to Friday's sell-off. And stay with Bloomberg Surveillance Early Edition this hour. We also speak to leading economist Jim O'Neill and to British Fashion Council Chief Executive Caroline Rush. Now, you can send in your questions on IB Plus TV Go. Now, first thing is first, let's check on the markets. We did see a little bit of repositioning, certainly after that huge sell-off that we saw on Friday. Stocks in Europe and also U.S. equity futures actually rebounding with Treasury yields. And we see a semblance of calm returning to global markets while investors reconsider some of their worst-case scenarios for the Omicron coronavirus strain. Now, investors really trying to figure out if the Omicron flare-up ends up being a relative brief scare that markets rebound from, or whether it's a bigger blow to global economic recovery. That just means a waiting game as we find out from virologists, we hope in the next couple of days and weeks, what we're faced with. Now, much remains unanswered about the new strain. We know that 2 South African health scientists suggested it's presenting with mild symptoms so far. The picture overall on Europe seems very similar, actually, between the FTSE, the CAC, and the DAX, down some 0.3%. So, sorry, 0.6%. So 0.7% lower, actually, for the FTSE 100. So travel bans being imposed on Southern African nations as governments try to slow the spread of the new Omicron variant in order to buy scientists more time to learn more about the latest mutation of COVID-19. Now, here's how some of the world leaders have been reacting.
I've decided that we're going to be cautious, make sure there's no travel to and from South Africa and 6 other countries in that region.
There is no scientific justification whatsoever for keeping these restrictions in place.
I'm aware that the restrictions are stricter compared to other countries, but we must be as cautious as possible about an unknown risk.
It does appear that Omicron spreads very rapidly and can be spread between people who are double vaccinated. There is also a very extensive mutation
The new variant is concerned. It moved from being a variant of investigation to a variant of concern within the space of 24 hours.
We are in a strong position, but the objective of what we're doing tonight is to keep that position strong.
We call upon these countries that have imposed travel bans on our country and our other Southern African sister countries to immediately and urgently reverse their decisions.
Now to talk more about the markets and, of course, this new variant is Scott Thiel. He's Chief Fixed Income Strategist at BlackRock. We're also joined by Sam Fazeli from Bloomberg Intelligence. Scott, thank you for joining us. First of all, the sell-off on Friday was really sharp and really ugly. Part of it is, of course, the kind of liquidity that we saw, or volumes, because it was the day after Thanksgiving. But did you? Is there anything that actually makes you buy the dip, or is there anything that you thought was unusual on Friday?
Well, I make a couple of observations. The first is that it was clearly a restart off trade, right? So we saw sectors that had performed well in the restart give back or lead the downward movement. We saw yield sharply reverse, stocks lower. But I also think the second observation I would make is that there was some interesting movers that we wouldn't necessarily associate with that type of kind of restart off trade, if you will. So, for example, the euro much stronger on the day with the pound more or less unchanged against the dollar. It also gives you insight, Francine, into I think where crowded positioning is. And I know you were talking about Bitcoin, for example, earlier in the program. That, there may be times when the market is in such panic that investors are forced out of positions that they have. So I think it's an interesting way of looking at kind of what crowded positions are. And then the final observation I would say is that markets have corrected back. I think part of it obviously is given the uncertainty of the situation, the return of liquidity on a Monday morning. But I think it's more about investors are becoming a little bit more thoughtful about what's going on and understand that there will be some time, right, before we know more information.
Yeah. Yeah, and on that more information, so Moderna, Sam Fazeli, is actually rising some 9.9%, saying that an Omicron vaccine may be ready early 2022. Are we certain at this point that we'll need new vaccines or new boosters to actually, battle Omicron?
Good morning, Francine. No, we're not certain. It does need the work to be done. It is very possible that the antibodies that the current vaccines generate are not as good as neutralizing the Omicron variant. But it's also possible that vaccines that have been in development already at AstraZeneca, BioNTech, Pfizer, and Moderna, designed against the beta variant, have better efficacy. And then we'll have to wait and see how that shapes up. And maybe a third dose also takes your antibodies so high that you can still fight off Omicron, at least for a period of time.
So, Sam, and then I want to go back to the markets with Scott. Sam, what are we certain about at the moment? That there's a lot of mutations, but we don't know whether it's more deadly and we don't know whether it's more transmissible, or is it a given that it transmits quickly, more quick than what we have at the moment?
Well, Francine, it's got characteristics that are similar to the Delta variant in terms of some of the mutations. So it is possible that it's at least as transmissible as the Delta variant, possibly more. And in terms of the deadliness, etc., we really have to wait and not hang too much on anecdotal information from, for instance, South Africa, which is what's making people feel a little bit better today. I am hopeful. I would love it to be the case, but I'm not sure that we really have any information to base views on as to whether this is a mild or more severe or less severe, etc. Variant.
So, Scott, now that we're away from the panic of Friday, what do we know this could have an impact on inflation with? Again, we don't have much news, but if you game it out for us, what does it do to inflation 2-3 months down the line?
Yeah, I mean, I think there's two ways to think about what is the impact on growth, what's the impact on policy, and what's the impact on inflation. Let's take each one of those. I think they're important. The first is obviously depending very much on the efficacy of vaccines and how the medical and the human impact of what's happening. And we'll know that obviously as the days unfold. If it's not as severe as was first feared on Friday, it really delays the restart more than stops it, right, Francine? And so that's an important factor, which is perhaps why the markets are becoming a little bit more sanguine about the panic on Friday. Second is that obviously with respect to inflation, obviously we saw a big drop in oil prices. Again, the restart trade, in my mind, being unwound or at least being taken back and then the panic. But listen, I think it's important to remember, right, in our view, and I think in most market participants' views, the Fed's inflation target has been met, right? It's about the employment situation, which we'll obviously get more information about on Friday. So I think it's, for us, it's not necessarily about about when liftoff starts, but it's about the quantum and about the pathway going forward. And again, I think it's very hard now to read, given the information set that we have, as to how that will impact inflation and policy. But I would say that, again, in our mind, the inflation target has been met.
Sam, so last Thursday, everyone was celebrating Thanksgiving. We seemed like everything was getting better. We were going to have a good Christmas, and suddenly Omicron hits. We find out about it, and we realize that already it's spread. How much do we know about what it's like, actually, Omicron in the US, in Europe, and the UK? Could it be much more widespread than we think?
Yeah, I mean, Francine, really only genomic analysis will show that. It is possible that it's more widespread, but countries that do a lot of PCR sequencing, such as the UK, would have noticed that, because in certain PCRs, you get a slightly weird response, which was the case also with Alpha, if you remember. That's how it came to be identified so quickly. So I think we would have known, at least in the UK, if it was a lot more widespread. But is it 5 cases, 2 cases, 3 cases, or 20 cases? That's the part that's difficult to know. But I don't expect it to be really widespread yet.
All right, so thank you both for joining us. Sam Fazali there from Bloomberg Intelligence, and Scott Thiel from BlackRock stays with us, and we'll have plenty more, of course, on the markets a little bit later on today. Also, the Pfizer chief executive, Albert Bourla. Don't miss that conversation on Bloomberg Balance of Power. That's at 5:30 p.m. London time. We're also looking at the World Health Organization. We heard from a number of good scientists trying to explain exactly what they're looking at. We'll have plenty more from the WHO, and Smart Conversations continue on Bloomberg Surveillance Early Edition. A little bit later on, we'll also talk to the British Fashion Council chief executive, Caroline Rush, and then Jim O'Neill, Lord O'Neill, on the 20th anniversary of BRICS. Up next, we continue our conversation with BlackRock's Scott Thiel. Send in your questions on IB Plus TV Go. This is Bloomberg.
When your shares are down 20%, it's going to hurt. But talk to us about, well, really what you're seeing. Take us more forward-looking. Are you worried about people exiting pandemic era and going back to the gym, or are we going to work out at home more?
Well, that's actually the advantage that Beachbody has, is we have never been a direct competitor with the gym. In fact, what we rely on is our ability to influence the 150 million people in North America specifically who are overweight or obese and haven't made that choice yet. Our job is to influence them with great content and this combination of what we call the total solution: fitness, nutrition, and community, so that they can tap into this incredibly cost-effective solution that is entertaining and engaging right at home, so that they get results. That's our job, is to help the new person engage in healthy lifestyles.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says, I look like I'm 101.
I know, I noticed that.
Do you think I need a lift? Is it time
What
that
did he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I had no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
I think it's time for change in policy at the Fed. And I was of the view that this may be easier with someone who hasn't repeated over and over again that inflation is transitory, don't worry about it, it's going away. Inflation is not transitory. And it's really important for the Fed to realize this.
Bloomberg opinion columnist and Allianz chief economic advisor Mohamed El-Erian, they're urging the Fed to acknowledge that inflation is not transitory. Scott Thiel from BlackRock is still with us. Scott, of course, when you look at the variant, it's unclear whether, if we have more lockdowns or if this further changes supply chains, how much more inflationary this could be.
Yeah, no, and I think that's right. I mean, I think the key here is going to be we talk about the vaccine-led restart, right? It's the effectiveness of vaccines, not only the ones that are currently out there, but also the ability for the drug companies to then produce something which we think, again, from the knowledge that we get, is something like 100 days from now to in people's arms, if that's required. That's a very important component to the restart, Francine. And so that's the mystery here for us is, will the vaccines be effective, or is this variant something outside of that? Obviously, if it's outside of that, that changes the view. But I would say, again, as we talked about beginning of the segment here, in our mind, the inflation target has been met. And so it's really, in some respects, for the Fed anyway, about the employment situation. Obviously, the Omicron situation is important immediately, but longer term, it's about the employment situation in many respects.
Scott, so do the data points coming out of the U.S., do they matter less because of the variant that could scupper everything, or are you still quite interested to give us an idea of what the Fed is thinking, at least, on data out this week?
Yeah, no, I mean, I think we're gonna stay with our central thesis, which is that again, hoping that the variant does not have a huge health impact, and then that will lead again to what we believe will be a liftoff. QE coming to an end at some point in the middle of 2022, with liftoff around the middle of 2022. Probability of that change from about 70% for a liftoff in May to about 40%. But again, I think it's a little hard to read that with the illiquidity and volatile markets on Friday. But we'll stick with the central thesis for now. Obviously, all of the information that we get, particularly related to the labor market, will be important. We get the non-farm payroll number this Friday.
Yeah. How problematic is Omicron for a lot of the emerging markets that you thought were starting to maybe, had a head start in normalizing policy?
Yeah, I mean, I think it's, the emerging market central banks have very much reacted to the inflationary profile that they've been faced with, right? We've seen rate hikes across the sector, and we've seen expectations of further rate hikes being priced into the market, and currencies cheapen. And that's part of the reason why we like emerging markets, is for both a higher yield and the valuation of currency seems to us to be attractive for investors on a medium term. I would look at South Africa, for example, as an interesting case here, given the situation down there. The rand is 2% cheaper really since we got the Omicron news, but back from about 3.5–4% cheaper at its lowest point. If we look at it, though, it has been cheapening as a result of kind of the concerns around emerging markets and around policy, et cetera. So what I would say is that, again, I don't see the impact has come back quite a bit from Omicron, Fran, and I think we're going to remain with our central thesis around staying invested as we go through this period. Again, obviously, if the vaccine information changes, that would change our view.
Yeah. Does it change supply chains that have already changed further, or does it just make a marginal difference?
Well, I think it's tricky to say, right? I mean, obviously, if it's a lasting impact and it changes, it leads to further restrictions, I think that would be significant. But what I would say on the restrictions, right, is what we've seen is interesting is, listen, the UK government is a good example here. They reacted very quickly, right? They've reacted very quickly to the new variant. They've imposed restrictions they've added mask wearing and on the tube, et cetera. They've restricted travel. And so I take some comfort in this kind of the quicker response, which in some respects hopefully will be, make the response less stringent and also more effective. And so I think we have to watch the confluence of these factors as we go through time.
Scott, thank you so much. Scott Thiel, their chief fixed income strategist at BlackRock, joining us this morning. Now, we'll have plenty more, of course, on the markets, and we'll have plenty more on Omicron throughout the day. Let's also get to the Bloomberg First Word News. And here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The World Health Organization is working with researchers to better understand the new coronavirus variant after health experts in South Africa said it appeared to cause only mild symptoms. The WHO says there's no information yet to suggest Omicron symptoms differ from those caused by other variants. Now, early data suggests American shoppers returned to stores on Black Friday this year, but traffic remained well below pre-pandemic levels. According to Sensormatic Solutions, visits to stores and shopping centres trailed 2019 levels by 28%, but were up almost 50% on last year. Adobe estimates online purchases totaled $8.9 billion at the low end of expectations and slightly less than last year. Now, LVMH's star designer Virgil Abloh has died after battling cancer for several years. Abloh came to prominence as Kanye West's creative director, but later made history as the first African-American to lead Louis Vuitton. He was a key figure in the brand's push to attract more millennials. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, coming up, oil rebounds from Friday's rout as traders assess the risks to global demand from the new virus variant. That story is up next. We'll have a full roundup, of course, of market news as well. This is Bloomberg.
represent 5,500 forecourts, which is roughly 65% of all service stations in the UK. Of the ones that we were able to survey yesterday, roughly 1,500, 27% said they didn't have any fuel, 21% said that they had one fuel type or another, so that's either petrol or diesel, and 52% said that they were fully stocked. Northern Ireland, Wales, Scotland seems to be okay, but we still are seeing, like your reporters are seeing, some stock outs at sites around London and the South East, I'm afraid.
When do you feel confident that this will 100% be in the rearview mirror?
Well, what we're hoping is those people that got fuel over the last few days obviously don't need it again for another few days, and that will give us a chance to actually start to restock the network. So we're trying to get it back to a reasonable level today and tomorrow, and then over the coming weeks, because it will take a number of weeks, to get it back to the sort of more normal running levels.
On the supply chain, are you starting to see things improve? And if you are, where specifically, sir?
Well, this year we have been mostly affected by the semiconductor situation, and we believe that the Q3 was the quarter that was most affected.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, there is quite a lot going on in the markets. Oil also rebounding from Friday's rout as traders assess the risks to global demand from the new virus variation. Well, speculation is also mounting that OPEC Plus may actually decide to pause output increases when they meet this week. Let's get straight to Bloomberg's Julian Lee, who joins us now with the very latest on oil. Julian, first of all, good morning. Oil prices recovering about 40% of Friday's slump. So where do they go from here?
I think over the next few days, they're probably going to remain pretty volatile. And I think there's a number of things that are going to be driving that. One is obviously how health authorities around the world assess this new strain of the coronavirus, whether this is seen to be as dangerous and as transmissible as the Delta variant, or whether it turns out to be, in some senses, more benign. I think all of those deliberations are going to have a huge impact on oil prices over the next few days. And then, of course, traders are also going to be assessing what OPEC will do and their allies in the wider OPEC Plus group, how they will respond both to this new variant and to the announcement earlier last week of a stockpile release led by the United States.
So, Julian, how are the OPEC Plus oil producers going to react? And as you say, this is after the strategic oil reserves were actually released, and the government stockpiles. How does this all play out, given that we don't know actually what Omicron is in the future, so we don't know how much demand it will dent?
Yeah, I think the thing that we have to bear in mind is that even before any of this, if we were having this conversation a week or so ago, before the new variant was identified, before President Biden came out and announced this stockpile release and other countries joined him, even then, the OPEC Plus group was forecasting that the first quarter of next year, we would see a very large stock build. So they were, I think, already potentially considering a delay to adding more oil in January. The stockpile release, I think, has added weight to that argument that the consuming countries are putting oil into the market, therefore OPEC Plus doesn't need to. And this new variant, I think, has just heightened that view.
Right. Julian, thank you so much. Julian Lee there from Bloomberg Intelligence. Now, Smart Conversations continue on Bloomberg Surveillance Early Edition. We look at the markets, we look at oil, and of course, we look at emerging markets. This is Bloomberg.
When you put the garbage inside, there's a little sensor that detects the garbage and speaks out. And this is one of the initiatives that we have created here. We, as the residents of this neighborhood, a bunch of neighbors that have come together to try to deal with the fact that our neighborhood is dirty. We want to make a difference. We want to have a clean streets that look nice and are nice to walk in.
בבקשה.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. This week, find out how Lini Oberg is helping Marriott transform itself at a pivotal moment for the hotel industry.
Part of our job is to make sure, what do customers want? What are they thinking that they want next year and the next year?
Chief Future Officer, brought to you by Workday, Wednesday on Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The WHO urges caution as more Omicron cases spring up around the world. Countries tighten travel restrictions. Investors recalibrate risks from the new strain. Oil stocks and yields climb, but the moves are modest compared to Friday's sell-off. And stay with Bloomberg Surveillance Early Edition. This hour, we speak to the British Fashion Council Chief Executive Caroline Rush. Up next, we're also joined by leading economist Jim O'Neill. Send in your questions on IB Plus TV Go. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. The market's a lot more positive compared to what we saw on Friday. I was in the office Friday looking at the bloodbath that was across the board when you looked at a lot of Wall Street, but also European stocks. On Friday, they were down between 3% and 4%. Today, we're seeing a little bit of a pickup, certainly a lot more optimism out there as we try and figure out what Omicron is. The European stock 600 gaining 0.9%. A lot of the questions are now on what it means for central banks, what it means to inflation, but certainly it's a different mood out there with the markets. The turmoil definitely easing, and investors are trying to work out if Omicron flare up ends up being a relatively brief scare that markets rebound from, or a bigger blow to the global economic recovery. Well, to talk about all of this and the BRICS, we're joined by Jim O'Neill, a leading economist known for creating the acronym BRICS. It feels like it was yesterday, but actually it was back in 2001, 20 years ago. Lord O'Neill is also former chair of Goldman Sachs Asset Management, former chair of Chatham House, and a former UK Treasury Minister. So, Jim, as always, thank you so much for coming on. There are many, many questions about what happens with inflation, what happens with emerging markets, what happens, of course, with global growth because of Omicron. How should we look at it right now? There was a big sell-off on Friday. Was it overdone?
No idea, Fran, to be honest. I think, not for the first time, there's twists in this coronavirus pandemic that not even those most expertly trained at the epidemiology even really know what's going on. So right now, for the markets, we're back to one of those positions where you got to perhaps change your risk rewards thinking a little bit. Because obviously people until Friday had, bizarrely in hindsight, sort of forgotten about the quite inevitability of another mutation, and that seems to be the reality with these things. So we now got to wait and figure out what the evidence shows as to how bad this is. Obviously, the talk this morning, particularly coming out of South Africa, is that people that have got it don't appear to have particularly severe illness. So if that appears to be the case, then, within days we'll all be relaxed again. But how this morning I can't really see how anybody could really know. So it's not surprising the markets have bounced a bit, and it's not surprising that they've not bounced as much as they fell on Friday to me. But we'll have to see. I guess the bigger
20th anniversary, Jim.
The bigger issue, yes. On my forehead, still
20th anniversary of BRICS. What does this all mean for? I know, but that was, it's something that we still talk about, that people are still interested about. It has, pretty good longevity. Yeah. What does it mean for emerging markets? We're creating a two-speed world where the rich countries have access to vaccine and boosters and the others don't.
Well, I mean, part of the ongoing fascination of the interplay between economics in general and markets is you know, just the true reality. I can say this because I'm not in it every day, but the real uncertainties and the unpredictability. I would suspect, given how the mood started to develop about Fed tightening and central bank tightening, amongst the consequences at the margin of this latest news is that central bankers probably will be a little bit more careful about rushing to press the tightening button, which, given the peculiar relationship between many emerging market asset prices and central bank policies in the West, bizarrely, it might actually help emerging market financial assets because it means there's less threat of higher risk-free rates in the immediate future than otherwise would be the case. But obviously, in the big picture, in terms of the underlying structure of these economies, it clearly does heighten the inequitable distribution of vaccines and the fact that most African countries have had barely any vaccination. It adds to the large number of structural problems many of these places have got. And so you got to, as always, got to sort of set one off against the other, I suppose. Yeah.
Yeah, and if we take stock of what happened in the last 20 years, so China soared, India pretty much climbed, but Brazil and Russia stumbled. You know, with hindsight, is there anything that is structural in those kind of countries that would have made that predictable?
Let me say three quick things about that, Fran. First of all, even though nobody ever remembered it this way, we always tried hard to make it clear that we were sort of scenario gazing and not making specific predictions. Secondly, in that regard, I mean, I personally repeatedly said during the noughties when all four of them were flying that you would not be able to really tell the true, let's call it brick status of Brazil and Russia until we'd had a decline in commodity prices, and they didn't survive it very well. So the bottom line is countries in the emerging world that are very well endowed with commodities, life seems to be a struggle in terms of breaking through the so-called middle income trap. Both these countries, even though they've got a huge number of differences, have to somehow undertake reforms that grow the importance of their non-commodity sector. So they stop being this perpetual victim of wild gyrations in commodity prices and what makes them sort of lazy with it too. And then thirdly, very quickly, you know, in hindsight, 20 years later, I think something we developed in parallel, which is, we called it a growth environment score that measured the speed of the convergence gap on productivity. And if I would have been able to do that now, knowing everything I know from 20 years, you know, I would have given greater risk assessment to the speed actually getting, rather than just assuming there would be catch up, it would be dependent on certain things being improved. And in Brazil and Russia, neither has happened.
Jim, I know you've also spent quite a lot of time looking at how we can decarbonize our economies sustainably without losing economic prowess. Who's doing it right? Are we going too fast? Like, if you look at the transition, some say, look, the transition will last too long, so we're doing damage to the world. And others saying, well, we could be in for another shock, you know, very similar to what we saw with energy because we're going so fast.
Well, the bit I'm focused on is pretty topical to what you just mentioned about the strategic oil reserve. You know, as I often joke about, way before BRICS and indeed before I even got into the world of finance, I wasted 3 years of my life doing a PhD during the second oil price crisis. And the one thing it taught me is nobody has the slightest, it makes forecasting currencies seem easy trying to forecast oil prices. But I did learn a lot. And what is clear to me is that if we reduce the amount of marginal fossil fuels, and especially because of some of the alternatives being so weather dependent, particularly wind and sun, we will have these intermittent huge price spikes when there's a demand surge and a supply shortage in alternatives. So we have to have an even more imaginative approach from our policymakers, including what I specifically called for in a piece of Project Syndicate 4 weeks back, is for them to agree to unleash oil reserves to stop these huge oil price spikes, because otherwise, especially given all the inequality issues out there, our people are not going to support these things that might improve our lives in another 30 years' time, or particularly for our kids, because it's going to make their current lives so much worse. And so I really applaud this strategic oil reserve move, even though it was quite small amounts. But that's the sort of thing they've got to consider having in place as a permanent agreement, because otherwise the appetite to fight climate change will fail.
Jim, thank you so much, as always, for your time. Lord Jim O'Neill there joining us this morning. We'll have plenty more, of course, on what Jim was talking about throughout the next hours and days. Now, coming up, we'll talk about the future of fashion also and the challenges to the sector. Joining us, Caroline Rush, Chief Executive of the British Fashion Council, as they also prepare for the Fashion Awards. Send in your questions on IB Plus TV Go. This is Bloomberg.
Reducing global warming continues to be an uphill battle in the fight against climate change. 1.5 degrees Celsius. That's the temperature deemed the safe limit for global warming set by the Paris Agreement in 2015. To limit warming to 1.5 degrees Celsius, CO2 emissions would need to be reduced by 45% by 2030. 191 Paris Agreement signatories committed to setting national targets to reduce CO2. But current national targets project a 16% increase in greenhouse gas emissions by 2030, with global temperatures expected to rise to 2.7 degrees Celsius by the year 2100. Among the most vulnerable to global warming are many of the world's smallest and poorest countries.
It's such an interesting new world. The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging. We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I look at the opportunity we provide, and providing access to information and knowledge, I think we'll end up being on the right side of history as well.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the clothing industry is back in the spotlight this week with the Fashion Awards by TikTok making a comeback today. Working from home has changed the fashion landscape through the pandemic, but there's a darker side to the industry, with clothing manufacturers accounting for nearly 5% of global greenhouse gas emissions. So where's the industry headed? Well, Caroline Rush is the Chief Executive of the British Fashion Council, which of course helps organizes the awards tonight. She was first appointed as Joint Chief Executive of the nonprofit in 2009 and then took over as sole Chief Executive in 2012. Now, she's been credited with playing a crucial role in attracting brands such as Burberry and Pringle back to London and for raising the profile of the London Fashion Week. So Caroline Rush, as always, thank you so much for giving us a little bit of your time. When you look at the difficulties that actually the luxury and the fashion world has had during the pandemic, we just seem to be getting out of it, and things were getting better within fashion shows, and now we have a strain. Is the fashion industry as a whole a lot more resilient than it was 2 years ago?
I think the fashion industry's had a very challenging couple of years, but we've started to see with results that some of the businesses are, adapted, are starting to recover. But of course, is there any news of a strain and the idea that we might go back into potential lockdowns? We're seeing that obviously further restrictions in mainland Europe just causes an element of concern. But I do think that businesses obviously have really focused over the last 2 years thinking about their resilience and how they can adapt to living with COVID and coping with it sort of for many years to come, really.
Caroline, I don't know whether we still talk about Brexit as a concern of actually some of the hurdles there have been passed, and whether the supply chains have really adapted to the luxury and fashion world in the last 2 years.
Brexit has been a significant challenge for the fashion industry, I think particularly for British businesses. The rules of origin around clothing doesn't really fit the free trade agreement with Europe. And so there's a lot of details still going through. And of course is mindful that as our governments start to negotiate new trade agreements around the rest of the globe, that the fashion industry is considered. We contribute 35 billion to the British economy, employed 890,000 people pre the pandemic, awaiting for new figures, obviously. But there continues to be many challenges. As we said at the top, is that businesses are starting to recover as tourism starting to come back. There has been a pent-up demand, and that's quite a few businesses are starting to see that come through. But of course, is that we want to make sure that we're able to trade on an even keel with our counterparts within the EU, and to make sure that businesses are able to thrive headquartered within the UK. We have seen businesses move things like manufacturing, warehousing to Central Europe just to overcome some of these problems. And of course, that's very disappointing because it means jobs going from the UK to mainland Europe.
Caroline, the Fashion Awards presented by TikTok is a name shift that also represents, I guess, the impact and the importance of social media for fashion. Does that just accelerate with time, or does it stabilize?
Well, I think is that we continue to see new platforms coming through, and TikTok has been a fantastic partner during London Fashion Week. They supported young designers. The engagement of the platform has far exceeded the platforms that we engage with, and the speed in which people respond to it. So we're really looking forward to partnering with TikTok this evening. For us, it's a way of talking about new technologies, the reach of new audiences that you can get, of course, through partnering and through engaging with different platforms, is that the fashion industry has significantly changed through the use of technology. Of course, the birth of e-commerce back in the millennium, all the way through to how businesses are adapting and selling on social media platforms, and of course thinking about how fashion's engaging in the metaverse. So as we look at all of these platforms and we look at the audiences that they bring, and look at new opportunities for business really to flex their business models to engage with audiences and to be able to sell perhaps in a digital way rather than physical products, is a really exciting opportunity for the industry as a whole.
Yeah, and how do you see this playing out, Caroline? How does fashion actually play in the metaverse? I mean, we're just at the beginning of what the metaverse could become in 5-6 years.
So we had a report that absolutely leading change, and we want to make sure that they are recognised for that.
Yeah, and Caroline, I have to say the fashion world, was reeling yesterday with the sudden passing of Virgil Abloh of LVMH and the founder of Off-White. With his passing, what void will there be?
Well, yes, is that the news, of course, is very raw, is that it was quite sudden, is that Virgil had apparently been battling very privately with cancer, and he is going to leave, his passing is going to leave a massive void. He was such an incredible creative. He sort of represents fashion and culture and the blurring of all of those lines. He's been a fantastic mentor. He's given over his platform to so many. He has championed for diversity within the fashion industry, and of course has also delivered some really, really memorable shows and products. So it's going to be difficult, I think, for of course LV, but of course for the fashion industry, where he was very much not only admired and respected, respected but loved by so many. But of course, at these times, you have to think of his family and his closest friends and the impact of there. And of course, our love and our thoughts and sympathy goes out to all of them.
Caroline, thank you so much for your words. Caroline Rush, there, Chief Executive of the British Fashion Council, of course, with the awards also by TikTok led this evening. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Gazprom's third quarter net income has surged to an all-time high as gas prices reached a fresh record amid Europe's deepening energy crisis. Net income at the world's largest gas producer rose $7.8 billion compared with a net loss a year ago. The company says it will pay 50% of adjusted net income in dividends. Now, Australia's Prime Minister Scott Morrison is proposing new legislation that would force social media firms to reveal the identities of anonymous trolls. Under the laws, people who believe they've been defamed could get a court order forcing companies to disclose who is behind the post. If companies refuse, they'd have to pay a defamation cost. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Coming up, airlines respond to a deluge of travel restrictions announced over the weekend to slow the spread of the new Omicron variant. We take a look at travel stocks next. This is Bloomberg.
Competition is going to look like? Do you think there is going to be a price war? As you say, the fares are available now. You're suggesting they may not be there for forever, but nevertheless, talk to me about what you think the competitive landscape is going to look like here.
We've seen a bit of departures in this market, and this market has three very strong joint ventures that compete head-to-head daily to win the hearts and minds of consumers and businesses in the United Kingdom. So I don't see a difference in the competition. I think we've all focused on Heathrow as the major hub in the United Kingdom, connecting, of course, the U.S., New York, Los Angeles, and other locations. So I see this as a continuation of competition. We've been waiting for the day that we can compete strongly in the marketplace after such a long period of time where it's only been one directional traffic from the U.S. to the U.K., and now it's open, of course, to U.K. nationals.
You mentioned Heathrow. What about Gatwick?
We made a very tough decision in March of last year to really focus our efforts at Heathrow.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Now, the Omicron variant having a big impact on the travel sector, with airlines roaring back today after taking a beating on Friday. Let's bring in Bloomberg's Ed Ludlow. Ed, what do you have?
Yeah, good morning, Fran. I mean, a lot of green on the screen, right? We're rebounding from the losses we saw on Friday. IAG, the parent of British Airways, of course, up 4%. Lufthansa had been down earlier in the session, but then rebounding itself up 4%. And you see the low-cost airlines, EasyJet, Ryanair, also in the green. But you have to give context, right? This was a serious sell-off we saw Friday. So we bring up the two-day chart on the Stock 600 Travel and Leisure Index. You know, yes, we're rebounding somewhat, but we're nowhere near to clawing back the losses on a two-day basis that we saw from Friday. And there is concern out there. You know, Morgan Stanley writing that volatility will remain in travel stocks in particular. Why? Because they're susceptible to the news. We don't know a lot about this variant. There's more information to come, and we don't fully know the extent. Citigroup also seeing headwinds from further travel restrictions. You think about the UK requiring quarantine until you have a negative test. The US banning travel from those 8 southern countries, and then Japan going as far as banning all travel, all entry by foreign investors. There is a reversal of the trade we saw Friday, though. We do see those stay-at stocks selling off in US pre-market, and then some buying, of course, as the airlines that sold Friday. Fran.
Ed, thank you so much. Our Ed Ludlow there with the very latest on the airline stocks. Now, Bloomberg Surveillance Early Edition continues in the next hour. We'll have a full roundup of the markets and of Omicron. This is Bloomberg.
目前眼前状对我们军方来讲的话，我只跟委员报告，是我从军以来40多年以来看到真的是最严峻的时候。要翻台的话，他目前有这能力的，都有的，啊，但是要看怎么一个结局。说我们不做任何挑衅啊，但是说把他激怒了，就跟我们人一样，你把我激怒了，我手上能力我也会发挥出来。所以2025是我们研判要全面啊，我们这样研判的。
Well, China has. I've spoken with Xi about Taiwan. We agree. We'll abide by the Taiwan agreement. That's where we are. And we made it clear that I don't think he should be doing anything other than abiding by the agreement.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is a market that
over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We're in a tricky situation.
It's been a difficult conundrum, hasn't it, for the central banks?
The scenario that we've got a red-hot economy it is somewhat brought into question if this variant is as serious as some people think.
Right now, it's the fear that's driving prices, and I wouldn't necessarily get in the way, right? It's like catching a falling knife.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It is 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Monday, November the 29th. Our top stories today. Plenty of questions about Omicron, but not many answers. Global markets face weeks of uncertainty as scientists analyze the threat posed by the newest coronavirus variants. Look for flying to become more expensive and less convenient. Airline stocks are bouncing back, but governments continue to ramp up travel restrictions designed to slow the spread of Omicron. And the woman who's entering a world dominated by male creators. We will talk with the Russian dancer Natalia Osipova about the world's first ballet NFT non-fungible token. Good morning, everybody. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards, live here in London. And Kaylee, we saw a lot of fear in markets on Friday. You and I were talking a lot about this for a few hours on Friday morning. The extent of nervousness, markets, or was that robots, reacted, asked questions later. Now we still have a lot of questions.
Yeah, it may have been some robots, Anna. A lot of questions remain, but the market looking decidedly more calm, at least in Europe and the U.S. today. That wasn't necessarily the case in the Asian session overnight. Instead, stocks broadly lower once again. The Nikkei, a big underperformer. Those Japanese equities down about 1.6%. And China and Hong Kong were lower as well. A big group of stocks underperforming within that were actually Macau casino operators after the arrest of the CEO of the world's biggest junket operator raises concern about the regulatory crackdown in that industry in particular. And as a result, you saw the likes of Wynn Macau down the better part of 8% in the overnight session. Now, another big move from Friday was what we saw in the Japanese yen, a huge safe haven bid. It had its best day against the U.S. dollar going all the way back to March of 2020. And in this session today, it's actually really flat against the dollar. The dollar was gaining back a little bit of strength earlier. Right now, we're basically unchanged at 113.36. You are seeing a nice rebound across the commodity complex, though, including for some of those metals. Iron ore futures in Singapore up about 7% in the Asian session. Now, as for the picture here in the U.S., this Monday morning looking a lot better than Friday did. Futures are up about 0.6% on the S&P 500 after the worst day for that index going all the way back to February. In the bond market, we are seeing some reversal. We saw a massive 16-point move to the downside for the U.S. 10-year Treasury yield on Friday. This morning, though, it's up the better part of 6 basis points to 153. A big rebound in oil as well after a 13% decline to end the week last week. WTI is up about 5%. We're sitting at 71.58, and Bitcoin getting a little bit of a rebound after gaining over the weekend. Matt, right now is trading just shy of $57,000.
All right, Kaylee, thanks very much. Now we are looking at stocks here that are on the rebound. Pretty decent rebound, although not compared to the drops that we saw on Friday. I know you and Anna were on air after Thanksgiving talking about this a lot. A lot of nervousness about the spread of the Omicron virus and that reverberating through markets. Now investors are looking to buy the dip. You can see the Stoxx Europe 600 up 0.7%. German bonds are coming down in yield right now, so rising in yield right now, so investors are buying or selling those bonds. You can see Brent crude coming up 4.5%. Of course, huge drops on Friday. Nat gas also coming back. That's on concern about the coldest temperatures that we've seen in a lot of places since the early 80s. Up in Scandinavia, getting down to negative 37 degrees. I can't remember if that's Fahrenheit or Celsius, but at that level, the numbers are about the same, negative 36, negative 37. Louis Vuitton Moet Hennessy is a big gainer today, and I thought that was interesting. It's the second biggest point addition on the Stoxx 600 because what it means is investors are less concerned about lockdowns, less concerned about a slowdown in travel, and that's where, these luxury goods are sold for the most part in airports, in big travel, in tourist centers. And as we get more news that the Omicron virus may be fast spreading, but a mild infection, it looks like investors are calming down a little bit on that front. Anna?
Yeah, how much credence, how much weight do we attach to the anecdotal evidence as it is at the moment around mild infection? We'll certainly get into that conversation. Let's take a look at what lies ahead for us this week. We've got plenty to talk about here, aside from the Omicron virus. Of course, this hangs over everything. The UK government will convene an urgent meeting of G7 health ministers today. That is to discuss the latest developments on the new virus variants. And in the United States, President Joe Biden will also give an update. On Tuesday, Fed Chair Jerome Powell gets an early opportunity to defend his renomination when he appears before the Senate Banking Committee alongside Treasury Secretary Janet Yellen. Powell is also expected to defend his renomination, as mentioned. On Wednesday, Meta shares start trading on the NASDAQ under MVRS. That will be the new ticker, following the Facebook rebrand announced last month. And on Friday, we'll get the US jobs report. Payrolls are expected to rise by 550,000, another strong increase. And OPEC Plus will be meeting as well this week to reevaluate plans for reviving oil supplies. And Matt, you were talking about how oil prices bouncing this morning. They were down 13% on Friday, and that really adding another dimension to that OPEC meeting.
Yeah, I will say I was watching you guys on Friday, and just unbelievable the fear that swept through markets or maybe swept through the algorithms. So now you're going to see obviously a little bit of a bounce back, but we still haven't made up for what we lost on that day. Now, the WHO is working with researchers around the world to better understand the new coronavirus variant. Meanwhile, governments are banning travelers from South Africa and nearby countries. A little late, it seems. Anthony Fauci, the top medical advisor to U.S. President Joe Biden, is urging people to get vaccinated or boosted.
This is a clarion call, as far as I'm concerned, of saying, let's put aside all of these differences that we have and say, if you're not vaccinated, get vaccinated. If you're fully vaccinated, get boosted, and get the children vaccinated also. We now have time.
Of course, the big question is, do these vaccinations even work against this variant? Let's get more with Bloomberg's Maria Tadeo, who's been following the moves. And there are new headlines every few hours, Maria.
Yeah, there's new headlines, Matt, and there's new infections and new variants that are being found in terms of new cases of this new mutation. We've had in Germany, Italy, France. We've also had a big hub in the Netherlands with 13 cases already identified of the new mutation. Now, a lot of this, of course, Matt, is bringing up this debate. You mentioned Dr. Fauci, but in Europe is very much the same story. Every government, all of the European institutions saying if you are not vaccinated, you should get your vaccine now. And if you need a booster, you should get it now before the winter. What's clear now is that this mutation is already in continental Europe. The goal now is to prevent it from being widespread. The other thing, Matt, that is very interesting, and you and I have talked about this, is what to do with the IP of the vaccines. There is, again, a big debate as to whether or not they should be removed in order for everyone to be able to access the vaccines. What's clear is that this whole thing of no one is safe until everyone is safe sounds great on paper, but in reality, we've not been able to vaccinate everyone. There's a huge gap between the rich countries and the not-so-rich countries.
Okay, and in the meantime, government's scrambling to work out how to respond then to these infections of the Omicron variant then, Maria. And we've seen, as you say, it's already on the European continent. We've seen global governments respond, Japan most notably overnight with some really strict measures. What's the European travel curb situation? I say this conscious that this is controversial territory. The WHO's Tedros saying that South Africa and Botswana should be thanked and should not be punished for alerting the world to this new variant.
Yes, and many would argue that, you know, the reason why we find new mutations is because they're being sequenced. So in many ways, this is a good job that South Africa is doing. But in Europe, you have seen almost this knee-jerk reaction, this panic to say we're already worried and concerned about the winter. The numbers that we have already at the table are very worrisome. So anything that comes from the outside, we want to shut it down or not. Whether that is valid or not, this is not really the big concern for Europe. There's almost a sense that it really wants to protect itself from anything that's outside. When it comes to the internal borders in the European Union, the picture is different. As you know, politically, this is very sensitive, and this is something the European governments do not like to do, to shut down the Schengen space. That is a free movement across Europe.
It does seem like they may be closing the gates after the horse is already out of the barn. Maria Tadea, thanks very much for reporting on this for us. Now, travel restrictions on South Africa and 7 countries nearby should come into effect today in the U.S. Again, it's very likely that the horse is out of the barn. President Biden is going to address the nation on the variant later the day. Of course, Anthony Fauci has said it's likely that there are already Omicron cases in the U.S. Emily Wilkins, Bloomberg government reporter, joins us from D.C. What can the administration do, Emily, and doesn't it seem to be coming a little bit late?
You know, Matt, you make a really good point. And over the weekend, we did hear from some former advisors to President Biden, advisors on the COVID-19 virus, who say that this travel ban, it's not enough, that it's not going to fully prevent the spread of Omicron in the U.S., and that, in fact, putting these bans on these countries is, in a way, punishing them for being able to report out the new variant that we are seeing. And so there is some debate about how well that's going to work. What we are hearing from Dr. Anthony Fauci is that he does think the vaccines are going to prevent people from getting the worst symptoms that could be attached to this virus. But he also said that the importance of these travel bans are just to buy time. We don't know yet exactly how fast Omicron spreads. We don't know exactly yet how protected you are if you do have the vaccine, if you do have the boosters. And so having these travel bans, the idea is just to slow it down a little bit so when we do finally get the research, we can respond appropriately. Well, Emily, I'm sure Congress would also like to buy some time because they need to avert a government shutdown, deal with the debt ceiling, try and pass the Build Back Better plan all before their next recess for Christmas, which is in just 2 weeks. As the Senate returns to Capitol Hill today, what's their #1 priority? So a couple different priorities going on here. Number one is to make sure that the government is funded past December 3rd to avoid a government-wide shutdown. We're looking at potentially doing another short-term spending cover that would take us from here until perhaps mid-December, give lawmakers a little bit more time to finalize that budget for the next fiscal year. Also on the horizon is the debt limit. Lawmakers have until mid-December. We've heard December 15th from Janet Yellen as the date to figure out how to raise that. You've sort of seen the standoff between Democrats and Republicans. Republicans saying they will not partner with Democrats on it, but Democrats also so far not really embracing using that reconciliation process that would allow them to raise the debt limit on their own. And don't forget, there is still President Biden's social welfare and tax plan. The House did move that. It's now in the Senate, where we could see weeks, if not longer, of debate before the changes are made. It goes back to the House and then potentially back to President Biden's desk.
Emily, thank you very much. Emily Wilkins of Bloomberg Government in Washington. Thank you for joining us. Meanwhile, markets are facing weeks of uncertainty as scientists race to assess the risks posed by the Omicron variant. For more on the market response, Eddie van der Walt of Bloomberg Markets Live. Eddie, it's probably an exaggeration to say that the algorithms and the robots were in charge on Friday and now the humans get a chance to get back to their desks. If that's the case, we're not wholeheartedly rebounding from that fear of Friday. A lot of that fear still in the markets, even if we see a little bit of a rebound.
Yeah, absolutely. And I think, I think some of that repricing in some of the markets was warranted, right? I think, yes, we had thin liquidity. Yes, the moves was probably exaggerated. But I think, there was a lot of optimism in markets and people just thinking we're going to get away with, a risk-free Christmas and so on. And I think some of that's just being scaled back.
What about an oil, Eddie? Does the fact that WTI came down 13% yesterday actually accurately reflect a demand outlook that has gotten more cloudy?
Look, I think oil will be the place where this is played out. And I think at this moment in time, yes, there's a lot we don't know about the virus. But I think what we really care about in markets isn't what how severe the virus is. It's how severe the policy response is, whether we send people into lockdown and whether, global travel restrictions are enforced. And if that is the case, then yes, the oil price moves were warranted.
All right, Bloomberg's Eddie van der Walt of Bloomberg M Live, thank you so much. And of course, I was talking about Friday, but really all the days seem to blend together. But let's take a look at what is moving on this Monday morning in pre-market trading here in the U.S. Of course, it all really is about the virus and that variant. Moderna, the COVID-19 vaccine maker, says they could have a new vaccine for the Omicron variant by early 2022. So that is only a few months away. And as a result, that is a big outperformer in pre-market trading. That stock up the better part of 10%. You also are seeing a little bit of a rebound in the travel complex, not necessarily making up for Friday's losses, but still gaining a little bit of ground back. One of them, Carnival Cruise Lines, up about 3.3% before the bell. In the same vein, though, the stay-at-home plays that did really well on Friday are giving some of that back on this Monday morning. Zoom Video is down about 1.5% before the bell, Anna.
Absolutely. We'll certainly look for more evidence of that move. Coming up on this program, as the world continues to assess the risks of the Omicron variant, we will speak with an Oxford expert in epidemiology, Sunetra Gupta joins us, and is the world's first NFT for ballet. More from world-famous ballerina Natalia Osipova. That's ahead. This is Bloomberg.
Young woman that's watching this wants to be the next Diane von Furstenberg, what would you recommend?
Be as true to yourself as you possibly can. The more you could be you, the happier you will be.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons in New York with Anna Edwards in London and Matt Miller in Berlin. Now let's get your first word news, and it's the latest sign of tension between the U.S. and Russia. Moscow's ambassador to Washington, Anatoly Antonov, says that more than 50 diplomats and their families will have to leave the U.S. by the middle of next year. That confirms departures that Russia has warned of for months. The U.S. is taking a tougher approach after Russia banned the U.S. from employing its citizens at the embassy in Moscow. In New York, final jury selection and opening arguments are set for today in the trial of Ghislaine Maxwell. The British socialite is accused of grooming underage girls for sex with the late financier Jeffrey Epstein. She faces as many as 40 years in prison. In Spain, inflation has risen to its fastest level in almost 3 decades. Consumer prices rose 5.6% in November on higher food prices. That underscored the lingering consequences of supply chain bottlenecks across Europe. And shoppers returned to stores in the U.S. on Black Friday, but traffic remained well below pre-pandemic levels. According to Sensormatic Solutions, visits to stores and shopping centers rose 48% from a year ago. Still, it was down 28% from 2019. And I wonder, Anna, if more people will be taking advantage of Cyber Monday because of fear around the Omicron variant. And we are getting some news on the vaccine front right now.
Yeah, absolutely. We are hearing from BioNTech saying that they are starting developing a new adapted COVID-19 vaccine. This is, of course, in relation to the Omicron variant. They're also saying that they are assuming that a variant vaccine might be needed. That is the wording we're getting there. And Matt, this comes after Moderna, of course. We're seeing shares there in pre-market rising, as Kaylee was pointing out earlier, because of the fact that Moderna has said that they see a fast new vaccine being possible. The dangerous new variant could evade current shots. So there seems to be a view from the vaccine producers that a new vaccine is going to be needed, even though we don't have all those facts just yet.
It does seem like, everybody's already saying that they will have a new vaccine variant in a couple of months. At least Pfizer is saying it's going to take them probably about 100 days to develop a new vaccine. The question is, how dangerous is this new variant, right? We know, or at least we can see that it spreads fairly quickly. The question is it more fatal, or is it maybe even more mild, as we're hearing from scientists in South Africa?
Absolutely. So let's get a perspective on that. Sunetra Gupta, University of Oxford Professor of Theoretical Epidemiology, joins us. Professor, really good to speak to you. I know we're still searching around for a lot of facts when it comes to the Omicron variant. We've heard a bit more from South Africa just this morning, and obviously we heard over the weekend. How much weight do you attach to these testimonies from doctors in South Africa that suggest maybe symptoms are mild? Or do you think that's just because perhaps the age profile of those infected is young? Do you have much to go on when it comes to how severe disease is created by this new variant?
We always had a lot to go on when it came to how severe any coronavirus variant might be, and particularly the age profile of risk in terms of severity. So first of all, of course, I attach a lot of importance to the testimonials of people on the ground. They are the people who were there watching this unfold. So, without any, there is no doubt there that I would completely accept what they're saying. And at the end of the day, the proof is in the pudding, which is who is being killed by this virus and how frequently. What we need to remember when it comes to virulence, how bad it is that it depends not just on the intrinsic properties of that variant, but how much immunity there is in the population against severe disease. And at the moment, we have a population where there's a lot of natural exposure and a lot of vaccine exposure, or who've been vaccinated. And so I think we should be very, very confident that whatever its intrinsic properties are, we are in a very good place.
Okay, Professor, that's interesting, because you're then making the assumption that immunity gained through vaccination against the original form of COVID-19, or immunity gained through infection, yes, through having got the disease, or perhaps both. You're assuming then that will stand you in good stead against this new variant. Is that correct? And how do we know?
Well, we know that from other coronaviruses. This virus has behaved exactly as we'd expect if we look at how other coronaviruses, how we live with other coronaviruses, and indeed with many other infectious disease agents. Your first infection confers a very high degree of protection against severe symptoms and death. And that's what we really want to prevent. And so this new variant is arriving in a landscape of humans who have already experienced this virus, either through natural infection or through vaccination, on top of which most of us are actually not even that much at risk of severe disease and death. So we're talking about what we should always have been doing is focusing on the vulnerable population, and the vulnerable population have either been vaccinated or suffered natural infection. So they should have good clinical immunity. What we don't have and will never have is permanent immunity to infection, and we have to accept that. But that is not a bad thing. Infection merely tops up herd immunity and possibly also immunity against severe disease and death.
Isn't the most vulnerable population, those people who, especially older people who refuse to be vaccinated?
Yes, of course. And that's why we should be we should be directing our efforts at making sure those who are vulnerable and unvaccinated become vaccinated. That's what we should be doing, not putting masks on children.
what I really want to know is about this, how this is going to spread, you know, because in the U.S. there's some question about whether the Omicron virus is there. But if we know for a fact that 60 people came in by plane to the Netherlands, a relatively small country from South Africa, and were positive with Omicron, can't we assume that hundreds of people in the U.S. already have this variant?
Absolutely, and we should have, as we should have at the start, you know, in March 2020, one of the things many of us were saying is that obviously this virus has already come and it's already spread, given the characteristics of this virus. It's already spread. So Omicron, or whatever you want to call it, is now, it may have already spread. We wouldn't know, and that's the good news. That's the good part of it. So we wouldn't know because it's not killing people.
As far as the policy response, then, are travel curbs too little too late and therefore not appropriate?
Travel curbs are not appropriate under any circumstances. I mean, if it is true that travel curbs stop the spread of infection, which as we've just said, is very unlikely given that it's spreading invisibly, then those travel curbs should be agreed between nations. To unilaterally impose an irrational travel curb on nations, particularly ones which depend on the travel industry for the livelihoods and lives of people, is just unethical.
We only have about 30 seconds left, but if that's not the right policy response, what is appropriate given what we know now?
As you've just said, let's look at who's vulnerable and as yet unvaccinated, and also doesn't have natural immunity. And let's make sure that they're protected. Let's protect the vulnerable. That's what we always should have done.
Professor, thank you very much. Thanks for joining us. Professor Sunetra Gupta, University of Oxford Professor of Theoretical Epidemiology. Thank you very much for joining us. Later today, we'll continue to get perspectives on the fight against the Omicron variant of the virus then. Joshua Sharfstein from Johns Hopkins Bloomberg School of Public Health, Vice Dean. He will be joining us 6:30 a.m. in New York, 11:30 a.m. in London. Coming up on this program, more on the market response to Omicron with Charlotte Ryland, CCLA co-head of investments. We'll get further details on this rebound. What should the strategy be over the next couple of weeks as we wait to hear about lab tests of existing vaccines against this variant, and how should we play our end-of-year strategy? More on that next. This is Bloomberg.
There's a pretty good chance that you use products made by Meta every single day. If you've never heard of Meta, that's because it's the new name for Facebook Inc., the parent company of Facebook, Instagram, and WhatsApp.
All right, perfect.
In a spiffy presentation on Thursday, Mark Zuckerberg showed off his vision for what he's dubbing the metaverse. That's a sort of mix of augmented and virtual reality worlds which will let the user explore virtual ecosystems. Much of what he showed isn't yet available. It's really his vision. In that sense, it was more like the sort of presentation Elon Musk does, where he looks at what he hopes might happen one day, than what Steve Jobs does, or Steve Jobs did, which is showing off products he already has available. He also, in the course of it, announced a name to Meta. The company will be called Meta from now on.
Our mission remains the same.
It's still about bringing people together.
That's an effort partly to show the vision for the future, but also a way of casting adrift some of the toxicity associated with Facebook. But if this new company is going to be a success, or the new company vision is going to be a success, he will still have to deal with a lot of the same challenges that Facebook has faced. Concerns about privacy, content management, those are going to be just as pertinent, if not more so, in the metaverse as they are right now on Facebook's existing apps.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines. Matt in Berlin, Kaylee in New York, of course. And Matt, here in Europe, we see European equity markets rebounding. We also see oil prices rebounding. I mean, a 4.5% move would be a big deal on any other day. But given they dropped, what, 12, 13% on Friday, maybe not quite so much.
Yes, I would say here in Europe, right? Because, of course, you're in the UK and you've chosen to separate yourselves. I had to come back into the heart of the pandemic. I was in safe and sound America for the last few weeks, and then my beloved Ohio State Buckeyes lost a horrendous game of football against a team from up north, and I decided, that's it. I'm flying back. I don't care if the pandemic is worse in the heart of Europe. I would rather not be in the Midwest anymore. So, yeah, good to be back.
Good. Well, we're very glad in Europe, as I am geographically still, to have you back, Matt. Kaylee, what are you seeing on these markets as we head towards? This is a long-running argument that Matt and I have about the UK and its geography. Kaylee, what are you seeing on US futures then as we head towards the start of trade? It looks as if we'll get a similar rebound to what we're seeing here in Europe.
Yeah, but the rebound is not going as far as to make up for Friday's losses, which were the worst for the S&P 500 going all the way back to February of this year. Of course, it is still a positive session on the day in both Europe and when it comes to U.S. futures. But again, the gains are really quite small relative to the losses we saw to end last week. Right now, the stock 600 up less than 1%, about 0.9%, and S&P 500 futures up by about 0.8%. You also are seeing the start of a reversal in the bond market. Of course, the 10-year yield came in 16 basis points on the 10-year Treasury on Friday. This morning, we creep back up about 6 basis points. Right now, we're sitting at 153.63 on the 10-year. And as you both were just discussing, a rebound taking shape for crude as well. 13% loss for WTI to end the week last week. We start this week up about 4.5%. Right now, WTI trading at $71.25 a barrel. And of course, with that move in oil, we are seeing a subsequent move in energy-related stocks in pre-market trading. The likes of Marathon and Occidental Petroleum up more than 3% each. And then you also are seeing a rebound taking shape in the travel complex, including for the cruise lines, Norwegian and Royal Caribbean, up about 3.5% and 3% respectively, Anna.
Okay, let's get a perspective on these markets, on this rebound. Charlotte Ryland, co-head of investments at CCLA Investment Management, joins us. Charlotte, good morning to you. When we look at European equity markets rebounding a fraction of their losses from Friday, does that make sense to you, Charlotte? Do we just hover here for a couple of weeks as we gather more evidence, even if it's just lab-based studies around Omicron, and we get more real-life data, I suppose, from South Africa on what it's doing to hospitalizations? Is that what lies in store?
Yeah, I mean, I think there's, going to be a huge amount of uncertainty while we wait to see whether this is just another mutation of the virus and that actually vaccines and the treatments that we have in place are going to be able to cope with it. I mean, if the news flow turns out worse and therefore we get much more draconian response from governments, and clearly that's going to be very negative for markets. But I think our core assumption is that actually we can continue on the strategy we have been going on in terms of reopening, and that, we won't need to take something more drastic action, at least in the US and potentially in the UK as well.
And what would it be that would change that view, Charlotte? I mean, maybe that's right, and maybe that's the view that you stick with into the year end. But what would it take to change that view? Would it be something around the effectiveness of vaccines or further evidence of higher hospitalization in South Africa? What would change that view?
Yeah, I think it has to be, it's not just that there are cases, but that there are evidence that it is something that we can't cope with in terms of, there's hospitalizations and death rates, and perhaps it being much more virulent amongst younger parts of the population. I mean, that would be, where you would get, very severe concerns. But I don't think that is the base case from what we've seen so far. We know vaccines mutate, so, that is something we're probably going to have to cope with, is that we'll continue to have these sort of rolling changes within COVID, and it's not something that we're going to be able to very quickly eliminate, and it is something that the economies are going to have to learn to live with.
Do you worry about a hit to earnings? I mean, I noticed today, for example, Louis Vuitton Moet Hennessy is back up, and I assume, although I'm not sure if I'm correct, that the reason is investors were freaked out on Friday about lockdowns, about travel curbs, and that hits luxury purchases. And now they're saying, okay, it's not going to be as bad as maybe we thought. Do you worry about hits to earnings around the world?
Well, yeah, of course we do. But I mean, in terms of the luxury names, actually the travel part of that business hasn't really recovered. Certainly the Chinese are not going back out to Europe in the way that they used to, and shopping. That hasn't come back. But they are, of course, shopping at home, particularly shopping online. And that's been one of the things that's really supported people like LVMH's earnings and produced, pretty very strong earnings growth into this year, even without travel coming back. And of course, with the US again, a very strong wealth effect coming through in the US, and that has been translating into luxury purchases there as well.
In terms of sectors, Charlotte, what do you think is the safest bet right now? Where can investors kind of hedge?
Yeah, I mean, I think we're very much keeping the emphasis on quality businesses, and you can find that, across a number of sectors. So, I mean, within technology, some of the software companies, the Microsofts of this world, we still think look pretty compelling. There's clearly quite a lot of froth in some parts of the tech sector, Nvidia's, Tesla's, etc. So we've been somewhat cautious where valuations got very extended, but I think you still can find some sort of high margin businesses which aren't vulnerable to some of the inflationary pressures that we've got going on, some of the longer term growth trends still intact for those businesses. I mean, the traditional safe havens are things like, the staples of this world. So, it'd be a Pepsi or a Nestle or something where, people carry on spending on those kind of basic goods regardless of what's going on in the economy.
For tech, of course, they are particularly vulnerable to the threat of higher yields, but do you need yields to stay low for risk assets broadly to continue to do well, Charlotte?
I think it depends on what you think is coming through on the other side in terms of the earnings growth. So, I mean, where we still can have confidence in that coming through, I think that can be supportive. But I think you just need to be very cautious where you've got very extended valuations or where you've got business models where actually, it's much more about the hope and it's not really about the actual cash flows coming through. So I think that, there are certainly areas of bubbles within markets that investors need to be very cautious of. But, I think there's equally, some very solid compounding names within technology that are still compelling for the long term.
Charlotte, thank you very much. Charlotte Ryland, co-head of investments at CCLA Investment Management. Thank you for updating us on your thinking around these markets as we deal with the uncertainty and everything we do not know about the Omicron variant. Coming up on this program, it's the world's first NFT for ballet. We will speak with world-famous ballerina Natalia Osipova about the NFT that she is launching. That's next. This is Bloomberg.
You should be thinking about formerly incarcerated people as representative of their families also and of their communities. These are human beings. They're not disposable items. They are not to be warehoused, locked away, out of sight, out of mind. And so I'm out here in the public, because I am the conscience of those folks of America, I hope. I'm hoping to prick their conscience and know that I am just a symbol of a much greater problem.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. This week, find out how Leni Oberg is helping Marriott transform itself at a pivotal moment for the hotel industry.
Part of our job is to make sure, what do customers want? What are they thinking that they want next year and the next year?
Chief Future Officer, brought to you by Workday, Wednesday on Bloomberg.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in Berlin and Kaylee Lines in New York. Now, non-fungible tokens, or NFTs, have exploded in popularity this year with the help of collectors, speculators and celebrities stirring up hype and funding for them. And now ballet NFTs are taking center stage. World-famous ballerina Natalia Osipova, principal dancer at the Royal Ballet in London, and her choreographer partner, Jason Kittelberger, are auctioning off the world's first ballet NFTs at Bonhams in London from today. Natalia Osipova joins us now. Natalia, really nice to have you on our program. And I wonder, let's start with the simple question of why you've decided to launch an NFT. What do you hope to achieve?
Okay, hello. I think, it's first reason because pandemic actually almost killed art. We don't have live show 2 years. We don't know what it's do. We sit just home, creation video for Instagram. And I think with my partner, what next? What we can to do? And actually, my friend, we're talking about NFT, and we think that it's amazing opportunity creation, really high level art, that's and have independency.
And what actually will be owned, Natalia? Is it the specific performance? Is it the choreography?
No, this is like triptych. It's like 3 short video. 2, it's classical ballet and Giselle. It's 1, it's most beautiful classical ballet, romantic. We creation, we do it recording 2 weeks ago. It's just like black and white video. It's really beautiful. I dance live, special for NFT. And 3rd video, it's contemporary dance. We creation with my partner, Jason Kittelberger. This is contemporary dance. It's more physical expression, more body, more power. That's this one, yeah.
I have to say, although I'm an unlikely, I guess, ballet fan, I grew up reading Laban Notation in New York, and I attended the ballet a lot when I lived in London. How has it come back in terms of having a public, in terms of people watching live since the end of lockdowns?
That's amazing, that's really amazing feeling, because we come back on stage just 6 months ago. 2 years we sit home. It's to be actually really hard because dancer lose shape. Dancer always need to be physicality working to be on stage. I know I'm like cry, honest, because it's to be so touching. You understand who you are, you artist, you place for stage. I'm cry, and everybody's so exciting. That's art come back on stage now.
Natalia, have you and your colleagues found other ways to work with technology? I mean, we're talking right now about your NFT, but have you been performing more online? Have you got, have you opened some more conversations with your public online? Has ballet and has the arts changed a lot during the pandemic?
You know, I think that's what we try to do, creation new platform for art, especially for dance, because, you know, dance always to be a little bit behind. Now we want it to be like progressive and to be there. And I think it's like great opportunity, you know, for communication maybe with visual artists, dance, musical together, in like exactly, creation exactly like high level place for art.
Perhaps a lot of the work that's been done by arts organizations to connect with the public through the lockdown, Natalia, perhaps that opens up the audience, as Matt was saying, and perhaps the NFT opens up to new audiences, attracts attention from new audiences. When we speak to NFT creators, they're often men, and we've written at Bloomberg about how a lot of the NFT market is dominated by male creators. Have you experienced that, Natalia? Do you feel you're outnumbered, or has that not gone through your mind?
No, my mind, you know, I'm always to be dancer, always. You know, it's like dance culture and ballet culture. It's always to be more for women. Of course, I won't take as beauty, as physicality, as talent, give for world.
Okay, thanks so much for joining us, Natalia Otapova, principal at the Royal Ballet. Thank you very much for being with us. And Matt, another twist and turn, I suppose, in the NFT story. We've been talking about art NFTs for a long time. You know, the sort of the paintings and the digitally created, yes, exactly, digitally created images. And now we're talking about ballet as an NFT. I suppose it just extends your mind into new areas.
Yeah, well, you know, over the weekend I was reading a lot about Quentin Tarantino, who has sold off, I guess, pieces or maybe the entire script of Pulp Fiction as an NFT, and now the studio is suing him, claiming that he doesn't have the rights to publish the script in that way. Of course, he retained publishing rights, but they're saying an NFT is something different than publishing it in paper form or online. I'm not sure how you differentiate. That'll all have to be decided by the courts. But the whole crypto world took a beating, especially Bitcoin, in the sell-off on Friday. It's interesting to see it turn into a risk asset the same way others are, rather than a hedge.
Yeah, really interesting to think about whether real-world ownership how that extends into the NFT space, into the metaverse in the future, and absolutely on the moves we're seeing now. I mean, yeah, Bitcoin up by 1.6% after, and it didn't initially sell off all that much during the fear on Friday, but it soon caught up with that fear trade, and it was part of it. Now, coming up on programming, Studio 1.0, Emily Chang will be speaking to the Alphabet CEO, Sundar Pichai, about his next big moonshot, tech regulation, and the future of that metaverse. That is at 5:30 p.m. in New York and 10:30 p.m. London time. This is Bloomberg.
Esta operación definitiva para dar con la captura de este bandido la planeamos el 15 de octubre del año en curso. a las 8 de la noche en una guarnición de Bogotá, nos reunimos con los oficiales de inteligencia de la policía, nos reunimos con los oficiales de planeamiento de operaciones especiales de las fuerzas militares y de la Policía Nacional, y es cuando se decide cambiar y darle otro salto a esta estrategia.
It's such an interesting new world. The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I look at the opportunity we provide, and providing access to information and knowledge, I think we'll end up being on the right side of history as well.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
I think it's time for change in policy at the Fed. And I was of the view that this may be easier with someone who hasn't repeated over and over again that inflation is transitory, don't worry about it, it's going away. Inflation is not transitory. And it's really important for the Fed to realize this.
Allianz Chief Economic Advisor, as well as Bloomberg opinion columnist Mohamed El-Arian, they're urging the Fed to acknowledge that inflation is not transitory. Joining us now is Matt Winkler, Bloomberg Editor-in-Chief Emeritus. He just published a new column on how inflation bonds are betting on team transitory. And Matt, really a lot of this is in the definition, right? I think of, you know, your career with words, creating Bloomberg style. What do you think of the word transitory? It can be seen in so many different ways.
Well, of course it can. And if we really want to get at the essence of where inflation is, one really good place to look at, and something that all of us should do as journalists and commentators, is what does the market say? And what is the market, speaking of words? It's a collection of investors. And what is the collection of investors saying right now? It's saying inflation will peak in the next 2 years, and we will be back to trend over the next 30.
So what is trend, and where is the market telling us inflation is going to go?
Okay. It's showing us that, because we can look at something called Treasury Inflation Protection Securities, TIPS, created at the end of the 90s precisely for this sort of problem, if you like, where inflation is suddenly surging, and you can be protected from that surge. And the TIPS are showing us that inflation, based on their valuation right now, that we're going to see CPI surge in the next 2 years, but then it's going to decelerate. And if you look at that over the next 2 or 3 decades, it really looks very similar to where we've been over the past 2 decades. And in fact, some people are making an argument that the bull market in bonds isn't even dead yet, that we're likely to see more of it. And by the way, people who aren't even looking at the market per se are saying something similar. You know, whether it's Cathie Wood, who, as you know, is constantly referring to innovation as essentially deflationary. So the market right now, the Treasury bond market, is saying that inflation does not get anywhere near where it was in the 1970s. Okay. There's no such thing as runaway inflation in the bond market.
Okay, good morning to you, Matt. I mean, when we look at tips, though, and look at those clues, as you rightly suggest we can, as to what the market is pricing in, does that tell us? Does it really tell us about the future, or does it just tell us that investors are listening to the Fed's forward guidance and pricing that in? Is it just a market that just sees the world the way the Fed does?
It's actually very much about the future, because the bond market is about expectations and what you're going to return or see in a return over the next 2 years, over the next 5 years, over the next 10 years, out to 30 years. We can see all that in the bond market. So it's all about expectations. It's not the rear view mirror. And in fact, you could say so much of the commentary right now is the rear view mirror, because it's about what has happened yesterday with prices and inflation.
And thinking about something that is sort of ahead of us, not really in the rearview mirror, I suppose, though, Matt, would be the complications from the Omicron variant. I mean, your thoughts on what that does to the inflation debate, because you can see the weight it's applied to energy prices during Friday's session. That clearly points in the direction of deflation. But then on the other side, we know that supply chain disruptions have been driven by the pandemic. Which side of that do you fall down on?
Well, as Friday's market told you, even inflation that is such a certainty is quite volatile. In other words, people thought inflation was accelerating, and suddenly on Friday, oil prices collapsed. And that just shows you how fickle trading can be, particularly when no one really knows what's going to come in the weeks, months, and dare I say, years ahead. What we do know is that the market is saying that the trend that we've experienced in the 21st century, which is disinflation mostly to deflation, is likely to continue.
And an incredible bond rally. I mean, in your column, which our viewers and listeners can access by typing OPINGO on the terminal, you quote Gary Shilling, who basically started the job of a chief economist at a bank, I believe at Mother Merrill, like 50 years ago. He expects the bull market in bonds to continue running, and that we could even see 1% on the 10-year by the end of the year.
That's absolutely true. And he looks at everything the way a macroeconomist would. He looks at global trends, all kinds of trends, and from his analysis, he says that, for one thing, the fact that we are all getting older, the fact that we are, as a developed economy, likely to experience more disinflation means that the bond market is going to respond to that. And, there's a lot more to it than I've just said, but that's essentially his analysis. And that is, in fact, borne out by the price action of the bond market, whether you're looking at 2 years or 10-year treasuries or even 30 years. And for example, if you look at the benchmark 10-year right now, it's at least 70 basis points less than the last time unemployment declined to 4.6%. So if we were really scared about inflation as investors, why is the yield so much lower today than it was the last time, 2017, when employment declined to 4.6%?
Matt, thank you very much for joining us. Matt Winkler, Bloomberg Editor-in-Chief Emeritus. Thanks so much for spending time with us here on Bloomberg TV. Just wanted to mention Matt Miller. The lines we're getting from Scotland, Nicola Sturgeon, who the Scottish leader there, saying that, or she's calling on the UK's Johnson to tighten travel restrictions further, says the Scottish Omicron cases may be community transfer. So we're just adding to our knowledge, I suppose, about how far this has got in Europe.
Well, stating, in a sense, stating the obvious, right? This is going to spread. And then with a little bit of a populist comment saying they need to tighten travel restrictions. The question is, does that really help?
Yeah, absolutely. More Bloomberg surveillance is ahead. This is Bloomberg.
common ground on energy that you share now with the Prime Minister of the United Kingdom?
We are both very committed to the transition to a net zero future, and as part of that, to building up the renewable energy capacity for Scotland and the UK. Scotland has got massive potential in wind energy in particular, onshore and offshore, but also some real potential in new and emerging technologies, carbon capture and storage, for example. There's also, I think, an understanding, and perhaps the UK government and I don't entirely agree on the detail of this, but we must accelerate the move away from fossil fuels. We've got to do that carefully in a way that protects the people who are currently employed in that sector in Scotland, around 100,000 jobs, and do it in a way that doesn't see us importing more oil and gas, but instead moving to the alternatives.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We've definitely seen some signs of euphoria.
A lot of people were looking beyond the virus. I think a bit too early.
We need to remain reasonably calm.
The earnings story is still quite good.
It's the fear that's driving prices, and I wouldn't necessarily get in the way, right? It's like catching a falling knife.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Here is your Monday morning bounce from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene. I'm Jonathan Farrow, together this morning with Katie Lyons. Lisa back a little bit later this week. Tom Keene, your equity market on the S&P up 0.8%. Not many people convinced by this Monday morning bounce.
It's a bounce, and the VIX in 4 big figures, John. That puts where the crisis is right now, 24.63. So, John, what do you say? 17, 18, out to 28 or 29. The crisis of Friday, and we're back in halfway, but it doesn't feel like we're back in halfway.
The range of outcomes, Tom, still wide. TK Janhatius over at Goldman saying that they're unwilling to change any of their forecasts until we actually get a lot more detail on this variant. The data, Tom, we still lack that data, that detail.
And I'm seeing a lot of that. We lack the data, and Joshua Sharfstein to be with us, and we're thrilled to bring you Peter Hotez later this morning. But, John, what I see is a Wall Street saying we need more data.
Sound now and ask questions later. And that was the story on Friday. Kaylee, we still don't know. So many questions, so many answers still remain to be seen.
Yeah, exactly right, John. And I wonder if that's why you're not seeing a more convincing bounce in equities. Yes, S&P 500 futures up about 0.8%, but that doesn't even go as far as to recover half of the losses we saw on Friday. Same goes for crude. Yeah, up 5% this morning, but a 13% loss on Friday. So the market still seems a little bit iffy if, yes, the selling we saw on Friday was just overdone and overreaction, or if there was something real there that it needs to consider.
Kelly, we've got a few more weeks of this. TK, we've got 3 weeks until a Federal Reserve decision. That Federal Reserve right now stuck between a rock and a hard place.
They are. Greg Valliere publishes this morning, the U.S. economy is humming, and we may see that humming in the jobs report, John, Friday, and the first of the month data jump. John, you like the ISI stuff we're going to see here. When do we see PMI? I can't remember.
The ISM, a little bit later this week. Are we going to reference the fact that we're in the same room together?
We should.
Accident?
We're sure heretically. We know our Greek letters. We know Delta.
What's the distance between the two of us right now?
It's 1 Omicron.
1 Omicron. We still don't know what that is.
That's a distance. We're experimenting here, folks, and getting back to Bloomberg has been great about all of the adaptability to this crisis and the weekend we've all been through. And so John and I are doing an experiment. We're hermetically sealed. Miss Lyons isn't.
Your equity market, positive. Let's whip through the price action for you. On Monday, we bounced back from a big loss on Friday. Friday's loss, the biggest since February of this year. Up 40 points on the S&P, grinding high by 0.9%. We unwired things a little bit in the bond market, but as I say, Kelly and I, we've been talking about it. This is unconvincing. We had a monster move lower on 10-year yields on Friday. This morning, on a Monday, yields up 5 basis points on 10s back to 152.77.
Yeah, still leaves us about 11 basis points higher than where we closed on Thursday. So there's a long way to go if we want to get back to that level. Now, of course, there also isn't a long way to go from your couch to your computer, maybe, and it is Cyber Monday. So if you didn't get out shopping on Black Friday, maybe today is the day you are doing so. Adobe Analytics says as much as $11.3 billion could be spent online alone today, which would make it the single largest shopping day of the year. But of course, beyond that, there are some serious policy conversations we need to have today. One of them being President Biden is going to speak on the Omicron variant at 11:45 a.m. Eastern time. He'll be speaking from the White House, probably going into more detail about why exactly he decided to implement those restrictions on travel from a number of countries in Southern Africa. And I also wonder if he's going to use this as an excuse to push his Build Back Better agenda. Uncertainty, economic uncertainty created by the virus. Maybe he's sending a message to Capitol Hill as the Senate returns to from recess today. And then, of course, later on this afternoon at 3 p.m. Eastern time, we will be hearing from the chairman of the Federal Reserve. Jerome Powell will be joined by the likes of John Williams of the New York Fed. He will be speaking at an event that launches the New York Innovation Center. So does he address this variant and its implications for monetary policy? The conversation we were having pre-Thursday last week was about potentially an accelerated taper, a quicker normalization of policy. But does uncertainty around the virus give the Fed a little bit more cover? It'll be interesting to hear what he says today ahead of his testimony on Capitol Hill on Tuesday and Wednesday. John.
Going into payrolls Friday as well, Kaylee, thank you. Thank you very much. Tom, if you think about what we've heard so far, Vice Chair Clarida, Governor Waller, President Staley, President Bostic, all teeing up a faster taper. How do you tee up a faster taper now, given what we don't know?
You have to wait for the
going
science.
Into this Fed decision.
Is the key, John, you nailed it. This is the key message this Monday morning, folks. Within the panic, what you're going to do with your portfolios, guess what? We wait for the science. They're no different than we are.
Alsa Linios joining us now, Global Head of FX Strategy at RBC. Alsa, help us out there. How sensitive will this market be to incoming economic data, including payrolls Friday?
Well, economic data is going to be hard to trade off at the moment, just given, like you said, we're in this wait-and-see mode with respect to Omicron. The early indications that came out over the weekend from the chair of the South African Medical Association, definitely positive, but everybody acknowledging there's a lot further to go. And I think for the moment, we're really focused on how markets are trading into year-end. You know, Tom, you said it earlier, people have had a really good year so far, and part of the reason I think we've seen the pullback we've seen is people are just trying to lock in those gains rather than get too greedy into year-end.
Do you readjust for middle or late 2022? Is the sense that you have at RBC that all of your wonderful team recalibrates?
Look, at this stage, we're much more focused on the central banks that were about to hike and therefore maybe put off by the uncertainty, you know, to do an RBNZ, if you will. And I'd put the Bank of England very much in that category versus other central banks that didn't have any kind of big tightening decisions in the very near-term future. And I think by the time you get to the back half of 2022, things will look very different to how they do today.
I was sort of surprised, Alsa Lingos, a lack of a dollar retreat in the Omicron news of Friday, and to recalibrate with euro 112.89. Can you call a weaker euro?
Look, I think the euro call will very much depend on your Omicron outlook. Typically, euro dollar has been trading in line with equities for most of this year. So that's to say, when equities were rallying, euro dollar tended to be higher and vice versa. We saw a break in that on Friday, and I'm really glad that's what we saw because it makes perfect sense to me. You know, with the ECB very much back of the queue, lockdowns and the impact of COVID already having hurt the euro in recent weeks, it made sense that should rotate to the dollar. I still have a call for euro dollar lower into next year. I've had that call since the start of the year, not changed it now. But that's very much based on the cyclical strength of the US versus the euro area. And Omicron doesn't change that for me at the moment.
So we saw the flipping to euro strength rather than euro weakness on Friday. We also saw a massive bid come into the Japanese yen, and that was coming off of extremely weak levels. Was that just a one-off bid for a safe haven, or do you expect that we actually could see a more persistent reversal there?
Look, it's tough for the yen because I think the closer you get to Fed normalization, the more you'll anticipate that change in the hedge ratios of Japanese investors. And, everybody likes to position for that with dollar yen higher. But at the moment, the yen, the Swiss franc, and even to some extent the euro are the very popular, very clean, safe havens in FX. The dollar, like you said, a little bit more mixed, actually outperforming against most of the rest of FX, just not the majors.
Do you want to talk about the problem child in EMFX right now? Dollar lira. Elsa, let's go there. We're here from the Turkish leader this morning. We heard from him about 10 minutes ago. Says he will never advocate for a rate hike. A lot of people see him as the de facto leader of the Turkish central bank. How on earth do you play that currency, if at all, right now, Elsa?
I mean, it's a very poisonous question right there. All I'll say is that positioning in the lira is definitely not crowded. We don't think the market is massively long dollar lira. And I think that, if anything, creates real concerns when the central bank is not willing to hike rates.
Asalinios, great to catch up. Joining us from RBC on this FX market. Dollar lira out to about 13 this morning, 12.72, considering that a number of years ago, TK, we had a 3-handle. What a turnaround it's been in Turkey over the last several years.
It's been a complete, the stretch here is from 2002 out to, let's say, 2006, and then it unravels. And of course, what we've seen in the last couple of days is the mixture of Erdogan politics, his positioning in the Levant and down to Egypt. John, the Abu Dhabi meetings that were held last week and such, with the financial realities of Turkey and the financial realities, it's all about the banks.
It's another 3 percentage point move in the dollar's favour against the Turkish lira. We need to talk about way more than what's going on in this market than just a mutation of the variation of the virus over in South Africa and beyond. Tom Keene, so much was going on Friday. Spreads were wider in credit. The likes of Peter Cheer of Academy pointing out, Tom, that there's more to this than meets the eye. It's not just about a mutation, a variation of this virus. Look at what's happening in credit. If he's saying, if you're going to fade any move, don't fade Friday, fade the bounce this morning. That's the message from Peter Cheer.
Yeah, there's a lot of different opinions on this, and I'm going to go out to the long end of the curve where a lot of study was Ben Laidler looking at the long end as well. A 187 from 2% into 1.87% on the 30-year bond, John. And so much of that is the move we saw in the 2 weeks prior to Omicron. How much of a pullback was just a pullback? How much was actually the virus?
That's the point that Peter Cheer is trying to make. Kelly Lyons, your view on that? There's just so much more going on than the variation that has got everybody talking about over the weekend. In this market, it's about credit. It's about the Federal Reserve. It's about pulling back QE a lot more quickly. A Federal Reserve stuck between a rock and a hard place and a question mark over the Fed put. Just how durable will a Fed put be with this kind of backdrop?
But you could also take the other side of that coin, John, in that maybe this does give the Fed more cover to normalize policy at a slower pace, not an accelerated one as the market had come to price in over the last several weeks. But also to your point about, maybe there's something else going on here. We have to consider that this was a market that by and large in many ways was priced to perfection, priced as if the pandemic was over, and being reminded of the fact that that isn't the case not only just calls into question what's going on with the virus, but also just asset prices in general, how rich valuations are, and maybe it just gives a little bit of an opportunity to unwind some of that.
So if you're tuning in this morning, here's your price action. It's a small bounce back on the S&P 500 by 0.7 Yields are higher after shifting much lower on the 10-year on Friday. Yields are up by 5 or 6 basis points to 153. And look at the move on crude, Tom. We had a move lower of more than 10%. And this morning we're up by what? 5% to 71.55.
Yeah, we've seen a bounce here. And I'm looking at the Bloomberg Commodity Index as well. John, it's a crisis. The Dow has moved back to where it was mid-August.
We're in the same room and you're quoting the Dow.
I'm quoting the Dow.
That sounds
dangerous. It's just a welcome back for us both.
No, they canceled Tottenham on me this weekend. It's cruel and unusual punishment. I was ready to go.
Waking up in New York City, up 0.9% on the S&P. Coming up 7 a.m. Eastern Time. Jim Bianco, the president of Bianco Research. From New York, this is Bloomberg.
With the first Fed News, I'm Rishka Gupta. Warning from the World Health Organization. It says a new Omicron variant could lead to surges of the coronavirus with severe consequences. The variant was first detected in South Africa. Scientists there said it appears to spread more easily. The WHO assessed Omicron's risk as extremely high. Airlines, passengers and businesses had to respond to a deluge of travel restrictions announced over the weekend. There was an initial spate of flight bans from Southern Africa that has given way to wider-ranging measures that will make travel more expensive and less convenient. Over in Spain, inflation has risen to its fastest level in almost 3 decades. Consumer prices rose 5.6% in November on higher food prices. That underscored the lingering consequences of supply chain bottlenecks across Europe. And shoppers returned to stores in the US on Black Friday, but traffic remained well below pre-pandemic levels, according to Sensomatic Solutions. Visits to stores and shopping centers rose 48% from a year ago. Still, it was down some 28% from 2019. And in New York, final jury selection and opening arguments are set for today in the trial of Ghislaine Maxwell. The British socialite is accused of grooming underage girls for sex with the late financier Jeffrey Epstein. She faces as much as 40 years in prison. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Up front, when your shares are down 20%, it's got to hurt. But talk to us about, well, really what you're seeing. Take us more forward-looking. Are you worried about people exiting pandemic era and going back to the gym, or are we going to work out at home more?
Well, that's actually the advantage that Beachbody has is we have never been a direct competitor with the gym. In fact, what we rely on is our ability to influence the 150 million people in North America specifically who are overweight or obese and haven't made that choice yet. Our job is to influence them with great content and this combination of what we call the total solution: fitness, nutrition, and community, so that they can tap into this incredibly cost-effective solution that is entertaining and engaging right at home so that they get results. That's our job, is to help the new person engage in healthy lifestyles.
Young woman that's watching this wants to be the next Diane von Furstenberg, what would you recommend?
Be as true to yourself as you possibly can. The more you could be you, the happier you will be.
London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this story. How are you thinking about those dynamics?
This is a clarion call, as far as I'm concerned, of saying, let's put aside all of these differences that we have and say, if you're not vaccinated, get vaccinated. If you're fully vaccinated, get boosted and get the children vaccinated also. We now have time.
Dr. Fauci over the weekend from New York City this morning. Good morning to you all alongside Tom Keane. I'm Jonathan Ferro together with Kelly Lyons. Lisa back with us a little bit later this week. Your equity market up 40 on the S&P, advancing 0.9%. This is your Monday morning bounce. It is not that convincing for some people. In the FX market, euro dollar just south of 113, 112.91, negative 0.2%. Yields much lower Friday, a little bit higher this Monday to 153.63. And that's the extent of your turnaround in crude, Tom, 71.69. Negative more than 10% in Friday's session, up this morning by a little more than 5.
To remind from the oil panic, Brent crude 84 down to 76, to give you one measure of that. And of course, the president speaking here later this morning on Omicron. Emily Wilkins joins us now with Bloomberg Government as we move to the president's comments. Emily, I've spent the morning really looking at the vaccination matrix, if you will, of the United States, and there's one statistic that sticks out, and that is they calculate unvaccinated deaths are 13 times vaccinated. What will the president say to use Omicron as a tool to get more vaccinated?
Well, you saw President Biden go ahead and use the Delta variant somewhat successfully as an impetus for getting more people vaccinated, as well as getting more Americans to get their booster shots. And we can expect similar from the administration. I mean, we have seen that travel ban be put into place as of today on South America and 7 other countries. But even some of Biden's advisors have admitted that a travel ban is not enough, that it's going to delay the arrival of the Omicron variant to the U.S., but it's certainly not going to prevent it. And so at this point, the Biden administration, I mean, they've tied so much of what their success is going to be to getting over the COVID-19 pandemic. And the administration has made it clear that the only way they're really going to do that is through those vaccines and getting more Americans vaccinated.
Mario Draghi in Italy out with headlines in the last couple hours here on Omicron, but I think of Mario Draghi running the ship at Fortress Italy, Emily, and he sort of put out a non-mandate mandate a few days ago. Are we going to see non-mandate mandates from President Biden?
Well, we've already seen Biden go ahead and feel free to start having these mandates for the federal government workers, for companies, sort of putting those things into place. So this could lead to more mandates as more Americans just begin to experience them, as more companies get comfortable with them, with enforcing them. Right now, a lot of the mandates are still at the local level. And it's interesting. I mean, even here in D.C., we've had part of the mask mandate lifted, but only in certain circumstances. But surrounding areas are having the mask mandate put back in place. To a large extent, this is still a local and state game as far as mandates are concerned. But really the one thing that the government has are those vaccinations, are those boosters, and we're definitely expecting President Biden to talk more about that in his speech later today.
Emily, are we still seeing a correlation between the trajectory of the virus, the case curve here in the U.S., and the approval rating of President Biden?
I mean, to a large extent, we have seen the number of vaccinations continue to increase while we've seen President Biden's approval rating continue to slow down and decrease. Part of that is because a lot of Americans don't feel like the pandemic is over. They're still wearing masks. There's still concerns about large gatherings. Things aren't 100% back to normal yet. And Americans are also dealing with things like high inflation, which the Biden administration is saying is actually part of COVID-19. You heard Secretary Janet Yellen say to really get over that high inflation, the pandemic needs to fully get behind the U.S. So a lot of factors here, but one thing is really clear, that a lot of what President Biden has at stake is going to relate to how many Americans feel like the pandemic is truly over.
And President Biden may be looking for a win as it relates to his legislative agenda. You have the Senate returning to Capitol Hill today after a recess. Is the Build Back Better plan at the top of the agenda, or is it more about the actual deadline items like avoiding a government shutdown?
It really has to be about those deadline items. I mean, if they don't pass a short-term stopgap funding measure before this Friday, then the U.S. government is going to be experiencing a shutdown. They've got until mid-December, December 15th, to raise the debt limit. So that stuff is really going to become a much bigger priority than the social welfare and tax plan, the Build Back Better. Certainly, that's something that senators are going to be working on, that the Biden administration is going to be keeping an eye on. But just because of the deadlines we have coming up, that can't be the priority as the Senate returns today.
Aren't they overwhelmed by Omicron? I mean, you're talking like it's business as usual, Emily. I don't buy it for a minute.
I mean, look, there's only so much at this point that Congress can do about Omicron. At this point, we don't even know how transmissive it is, whether or not it works with the vaccines. There's so many question marks right now with Omicron and what needs to be done. We have seen a couple lawmakers say that there does need to be more assistance out there to help people with COVID-19, saying the pandemic is still very much in effect. But it's just some of these deadlines, Tom. I mean, you have until Friday to keep the government open. You have 2 weeks to make sure that you raise the debt limit. These are incredibly pressing measures for those in Congress, and it's something they can do something about, where with the Omicron variant, there's still a huge question mark as to what even needs to be done, let alone what Congress can do.
Emily, thank you. Emily Wilkins down in D.C. on the latest. TK, were you surprised by the move we saw on Friday?
No.
Just how violent that was?
No,
off the back of very little information.
You know, you go to the Bloomberg, John. This is the TE function in the Bloomberg. John knows it well. And I did a fitted standard deviation study from the top, a tippy-top optimism, John. We came down 4.6 standard deviations on Standard & Poor's 500. John, I would use the Standard & Poor's 500 for this careful survey because it's a better index mathematically to grab standard deviation.
Well, I'm pleased you've admitted that this morning.
Thank
Is
you.
that because
I
we're
did
so
it
close
just
to
for
each
you.
other?
Yes.
I appreciate that.
I wouldn't have done it if you were in the other room.
Given what we've heard from South Africa at the moment and the advisors to that government, this from a COVID-19 advisor over the weekend, speaking to Sky News, the cases that have occurred so far have all been mild cases, mild to moderate cases. I think we should keep making that point this morning, Tom. Of the little information we have, that's essentially it so far.
This is so important, and this is the virology and the science that we've tried to lead with through 20 months of this pandemic. I really can't emphasize this enough. To Joshua Sharfstein here in moments, and then on to Peter Hotez. We're going to look at the science. And, John, the science is we really haven't seen the gloom. I take real issue, John, with banners in the media that say high alert. There isn't a high alert.
I'm with you.
There's a virus.
We've got to work it out. We've got to work it out. And I go back to the work at Goldman over the weekend, Tom. The range of outcomes is still so incredibly wide. If it's more transmissible but less severe, can't we see that as ultimately a good thing? I mean, that's for the doctors, the medical practitioners to advise us on, Tom. But isn't that the end game in all of this? More transmissible but less severe.
More transmissible, I can't pronounce it, John. It's Monday. But what I can say is this is an event to get vaccinated, and you go from 59.1% blended American rate. Can we even dream of 65% off of Omicron?
That's the message coming from this administration, isn't it? Go out and get your booster.
What's Boris saying?
Have you had your booster?
I've had my booster. I was very boosted. They let you have your... Did Emily have her booster?
We can ask Emily a little bit later in the program, Tom. Do you mean Kaylee?
Kaylee, excuse me.
I have my appointment next Monday, Tom.
There we go.
Getting boosted.
Doing your part. Kaylee Lyons in for Lisa
Kaylee
Bramis
should
this
join
morning.
us in here.
She should.
I wish.
Coming up, Andrew Slimmon, Senior Portfolio Manager at Morgan Stanley Investment Management. Looking forward to that one with your equity market kicking things off this Monday morning up 0.9% from New York City. This is Bloomberg.
think competition is going to look like? Do you think there is going to be a price war? As you say, the fares are available now. You're suggesting they may not be there for forever. But nevertheless, talk to me about what you think the competitive landscape is going to look like here.
We've seen a bit of departures in this market, and this market has three very strong joint ventures that compete head-to-head daily to win the hearts and minds of consumers and businesses in the United Kingdom. So I don't see a difference in the competition. I think we've all focused on Heathrow as the major hub in the United Kingdom, connecting, of course, the U.S., New York, Los Angeles, and other locations. So I see this as a continuation of competition. We've been waiting for the day that we can compete strongly in the marketplace after such a long period of time where it's only been one-directional traffic from the U.S. to the U.K., and now it's open, of course, to U.K. nationals.
You mentioned Heathrow. What about Gatwick?
We made a very tough decision in March of last year to really focus our efforts at Heathrow.
People are talking about Bloomberg surveillance.
There's some guy out on Twitter who says, I look like I'm on.
I know, I noticed that.
Do you think I need a lift? Is it time
What
that
did he say about me? What did that particular gentleman say about... Let's have a look. One of them is near 101 years of age.
Which one would that be?
The other has an ego in the orbit of Mars. Who's that?
I have no idea.
Mrs. Lisa, the only chance to productive conversation. It's a fairly accurate summary of this show, isn't it, Tom?
The eyes, or should I do the whole thing?
Live from New York City for our audience worldwide on TV and radio. Here's the Monday morning price action. This is just small bounce back. I say small because Friday was vicious. This is the bounce back this morning, up 0.9% on the S&P, on the Nasdaq advancing about 1 full percentage point, on the Russell, the small caps, a similar amount. Talking about an unconvincing bounce as we still work through a really wide range of outcomes for what could happen or may not happen with the Omicron variant. This is what it means elsewhere in the commodity market. Give you a taste of foreign exchange as well. Take a currency pair like Aussie yen. Aussie yen, Tom, with a huge move on Friday. This morning, Aussie yen, a move of about 0.5%. That's nothing. Crude up 5%, nothing compared to the 10, 11, 12, 13 percentage point move we saw in Friday's session. And in the bond market, it's the Federal Reserve, stuck very much between a rock and a hard place. Switch up the board and get to the bond market. 2s, 10s and 30s. Your 2-year yield up 4 basis points. Your 10-year up 6 basis points. Tom, this was after a monster move on Friday's session. And for many people, TK, we've just got to wait. You've got to wait for the information, for the data. And there's so much about this variant which we still don't know. What we do know so far, this is all the information we have from South Africa, Tom, is that this variant so far, the cases they've seen, the cases are mild to moderate.
Yeah,
and TK, at least so far so good. That's good news.
Exactly. I say so far so good, and the president will speak later this morning. But John, I really agree with you that we need to look at medical professionals who are tactically involved with Omicron, and they're saying, wait a minute, lose the high alert hysteria and wait for the science.
And we're going to do that through this morning and through the week, no doubt. But TK, look at how people are already responding to this. The travel bans, Japan, the restrictions, the UK, the supply chain issues. Can you imagine China grappling with this one, TK?
Well, I had a long call this weekend with China about this, John, and I can tell you it's tangible on the streets across all of the Pacific Rim. And yes, they're going to reaffirm a zero tolerance risk. There's no question about that.
And if they're still playing COVID zero, Tom, what does that mean for supply chain disruption from here?
Well, I don't know. What I know is the supply chain disruption right now is getting better. Let's do this. Let's dive into some perspective here with decades of perspective. And I want to bring up the statistics here. What you need to know is in the buy-side game, there isn't a lot of discussion. You just look at someone's percentile performance. You look 5-year performance, 3-year performance, 1 year. All of this is discussed with a beverage in your hand and is done in 12 seconds. With Andrew Slemon of Morgan Stanley, we can do that, and we see a 5-year 88th percentile, a 3-year 94th percentile, and in the last 12 months, he slacked off. He's in the 98th percentile. That's out of 100 managers, only 2 did better, and probably that was Andrew Sheets for all we know. Andrew Slemon joins us this morning as well. How do you generate those numbers? What is the core Slimon religion that generates those stunning performance numbers?
Well, good morning. You know, look, I think it's flexibility to
being open-minded to what the market offers. Last year, travel leisure stocks got absolutely obliterated, and we bought those. This year, it's been a little bit more inflation value-oriented, and it's basically my belief that as much as people talk about inflation-sensitive stocks, most people are overweight in growth stocks. And so this has been a little bit more painful as energy has been the best performing sector. Financials have done well. Most people talk about that, but they're not invested that way. So having that bias has really helped us relative to the competition.
I did a Bloomberg study, Andrew, off the trading envelope, and I did a fitted standard deviation move, and we've had a 4.6 standard deviation move in the last 4 days. Is that a Slyman correction?
Well, look, on the one hand, I do agree with, what Goldman Sachs saying is, more transmissible, less virulent. I do think that people tend to not react the same way to the issues over and over. So COVID as a reaction is less so. But then again, there's a lot of complacency. The market's done so well this year. Yes, I understand the market was down a lot on Friday. But I saw retail money coming in. People are buying the dip. And so high levels of complacency. So I don't think, we'll get a bounce back, but I don't think it's going to be, dramatic because of that kind of complacency to this issue over and over. So if it morphs into something more serious, that could be a concern. I doubt it. I think there's much bigger issues next year than COVID.
Well, let's talk about those issues now. For the first time, Andrew, I've got to say this year, the first time I sensed some real hesitancy in your voice around this equity market. Typically, it's some conviction, some confidence, some bullishness. Andrew, you're nodding your head. What's happened to that?
Look, I mean, here's a very simple rule, Jonathan. The third year coming off a bear market or low, it's harder. The market doesn't do as well. And that's because financial conditions start to tighten because, central banks say, hey, things are getting better. We don't need this level of, liquidity. So financial conditions are going to tighten. And I think that will be offset by better earnings than expected next year. But the result is, kind of a, single-digit year. And as well as I do, with a market open as many days it is every day, and you can have a 1 or 2% move on any day, that's a lot of volatility around a single-digit year. So I suspect that next year is going to be a tougher year to make money unless you stay kind of focused on fundamentals and buying companies that are beating estimates. And I think that will be the big story again next year, as it was this year.
Peter Cheer raised a really good point over the weekend. I want to read out what he said, Andrew, and you can tell me what you think of it. For the first time since the pandemic started, we faced a sell-off where it's unclear what the Fed and other central banks will do. There is no guarantee of easy money going forward. Does that resonate with you at all?
Yeah. I think, you got tighter monetary policy coming. You have a potential corporate tax increase, so fiscal policy could be tighter. Those all things lead to a tough, maybe multiples come down a bit. My point is I think that will be offset by better corporate fundamentals, but it's not going to be a great year next year. It's going to be tougher. So that's why I was nodding at you. Yeah, this year's the game's been on, but I think it will get tougher next year. So to right here, as we sit today, I think the travel leisure stocks will bounce big today, but I wouldn't chase them because those are high beta stocks. And I'm just not so sure you want to have a lot of risk in your portfolio as you go into next year.
Andrew, how much of the tough picture for equities is actually predicated on the bond market and potentially higher yields and higher real yields?
I think that's part of it. Higher rates are part of it, but I think it's tighter financial conditions, really, because at the end of the day, really, if the 10 years at 1.5% or 2%, you invert that PE on the bond market is still astronomical. Stocks are cheap relative to bonds. But yeah, I think higher inflation will get, the Fed nervous and, they may not do anything, but the market's going to start to reflect that. And that's why the third year is a tougher year. And I think that's going to be the story of next year.
Does that mean stay away from growth in 2022, or what do you want to own in a year where it's harder to make money?
Yeah. Sure. I think, going back to what Tom said initially, my view is investors don't have enough of these inflation-sensitive stocks in their portfolio. Look at energy. It's the avoided, it's the unloved sector. So I've learned with energy stocks, they keep going up until suddenly everyone gets on board and they get bullish, and that's when it collapses. And I just don't think that's the truth there yet. I see banks, They had big sell-offs on Friday. I think that's a better opportunity to be a buyer today than, the reopening stocks. I don't think, those multiples remain really low. So I think it's in the inflation-sensitive over the growth names. But having said that, I don't think we're in a situation like 2000 where, the mega cap tech stocks are that particularly expensive. The high octane ones, boy, they've really come down, and I think they can continue to come down. But it's really this concept that inflation-sensitive stocks remain under-owned investors' portfolios, because that's not what's worked the last 10 years.
Are we going to see higher inflation? I mean, that's our call. Steve Major over at HSBC was heated this morning that longer-term duration yield shows a bet we will not see a persistent, pernicious inflation. Do you agree?
I think we're moving into a period like the 60s time where we had higher inflation, higher growth, because that's what it seems to me, that's what central bankers want. And so I think this dual mandate of the Fed of stable prices and maximizing employment seems to be tipping more towards maximizing employment. And that reminds me a little bit more of the 60s than the 2010s. And in that environment, the S&P did fine in the 60s. It wasn't until the 70s it struggled.
Look at you.
But inflation-sensitive stocks did better.
Andrew Sliman, right back to the 1960s and 1969, John, and Get Back, because Andrew and I watched Get Back this weekend, the new Beatles documentary. It was phenomenal.
You loved that, didn't you?
It was great.
What was so great about it?
It's how naked it is. And they even say while they're filming it that they're not happy that they're filming it. And there's some scenes, one scene where George Harrison talks about Eric Clapton is just absolutely stunning at the time.
Andrew Sliman at Morgan Stanley. Where can we watch that, Tom?
Disney Plus.
On Disney
Streaming
Plus.
on Disney Plus.
On Disney Plus.
Yeah.
Did you see what they did in Hong Kong with that episode of The Simpsons?
No, I missed that.
They got rid of it. It had a mention of Tiananmen Square, didn't it, Kaylee?
Yep.
A little bit of controversy around that over the weekend.
I missed
Kaylee.
that completely.
It's the difficulty of having your business and doing business in China, and we saw that evident many times last week. Jamie Dimon and his comments, of course, are the ones that made a lot of news. But if you're a Western company operating in China, you have to play by the rules to a certain extent, and The Simpsons feeling that one.
That difficulty is not going away. Let's not let this pass, Tom. That's the first time I've heard Andrew Sliman sound a little bit cautious on this market through much of this year, I think.
Yeah, I'll go with that. He's been calling for a correction. We need one. I guess we saw a correction on Friday. Maybe we'll get a little more. But I did hear a little bit by the dip there, even if there is a little more caution.
But Tom, this adds into something that Peter Cheer was talking about over the weekend, and I keep bringing this up. We're always obsessed with the shark closest to the boat, and right now that's Omicron, clearly. And for good reason, too. But there is so much more going on outside of that. Even if we get past this, Tom, is it a green light to add to risk assets, given what we've got to talk about in the middle of December around 3 key central bank decisions?
John Farrell channeling Winslow Homer, shark close to the boat. I love it this morning. Yeah, there's a lot of worries out there, but as Greg Villiers said, the economy's humming. What's the economic data we're going to see, John, for Q4?
And how responsive will we be to that economic data, given what we don't know
I go back
this
to
variant?
data.
Well, we can talk about this variant next on this program. Coming up, Joshua Sharfstein, the Vice Dean of the Johns Hopkins Bloomberg School of Public Health. Looking forward to that. Up 9/10 on the S&P. Was that your McCartney?
Get back.
Was that your McCartney? That's it.
It's magical. They start
I've seen that clip. I've seen that clip on how they put that song together.
Everyone younger should watch it. It's glorious.
Are you selling Disney subscriptions?
I'm selling Get Back.
You're selling Get Back. From New York, this is Bloomberg.
With the First Word News, I'm Rishka Gupta. The World Health Organization warns that the new Omicron variant could fuel coronavirus surges with severe consequences. The agency calls the variant's risk extremely high. Omicron was first detected in South Africa. Scientists there said it appears to spread more easily. A number of nations have now imposed travel restrictions to try to contain the variant's transmission. Moderna says it could have a new vaccine ready to fight the Omicron variant by early next year if required. That has the company's shares rising. Meanwhile, BioNTech is trying to adapt its COVID vaccine to handle Omicron. The German biotech and its vaccine partner Pfizer put plans into place months ago to ensure a new version of their shot could ship with 100 days. France has agreed with European allies to take new steps to clamp down on people smuggling in the English Channel. Last week, 27 migrants died trying to reach the UK. The European Union's border will force begin flights over the Channel later this week. And it's the latest sign of tension between the US and Russia. Moscow's ambassador to Washington, Anatoly Anatov, says that more than 50 diplomats and their families will have to leave the US by the middle of next year. That confirms departures that Russia has warned off for months. The US is taking a tougher approach after Russia banned the US from employing its citizens at the embassy in Moscow. And the most high-profile black figure in luxury fashion has died. LVMH's star designer Virgil Abloh had battled cancer for several years. He was 41 and was known for his influence on streetwear and sneaker culture and for his success in revitalizing Louis Vuitton. Global News 24 hours a day. I'm Ritika Gupta. This is Bloomberg.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. This week, find out how Leni Oberg is helping Marriott transform itself at a pivotal moment for the hotel industry.
Part of our job is to make sure, what do customers want? What are they thinking that they want next year and the next year?
Chief Future Officer, brought to you by Workday, Wednesday on Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging. We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I look at the opportunity we provide, and providing access to information and knowledge, I think will end up being on the right side of history as well.
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.